Nadine will be here.
Okay.
Nadine will be here, possibly the other one. Sure. So. Told her she didn't help her out, so. I'm exactly sure, but probably. Make sure you do the transcript and
I
the
did.
recording on top of the YouTube
I did the Zoom recording.
and transcript. It should be default, but just to be sure.
So my meeting information says that I selected AI companion. Where's the transcript piece? Test, test, test. Test, test. Test, test, test. Test, test. That on, that on. Test. Not coming through anybody's computer here. And if I go to YouTube, it should start coming through here. No, over this probably keeps I'm gonna get rid of that. There is a lag, definitely a lag.
So when I put these down, I put them flat, so half of them started to freeze, the other half didn't.
Oh, that's funny.
So I'm like, Armin's like, well, do I put the frozen one out, knowing that we got 40 minutes?
Mhm, mhm. There's a little thought. I have this on, just so you know, I'm just testing it. Why hasn't it come through yet? Hasn't switched out yet. This one can come on.
Now it's in the controversy. But the mode is artificial.
It's not switching. There we go. There we go. Okay, good. That was a lag. All right, I'm just gonna. The lag.
Yeah. Or Pepsi in the fridge.
You're the man there, Bryce.
Okay, we are recording, we are live.
Everything's good to go? All
Absolutely.
right. Welcome to the June meeting of the Audit, Budget, and Finance Committee of Buffalo Fiscal Stability Authority. Thank you for all being here. I will first call the roll of the committee members present. Director Sanfilippo.
Here.
Director Keenan.
Here.
And myself, Director Flora. The first order of business is to approve the minutes from the March 9th, 2026 committee meeting. A copy of the minutes and the accompanying draft resolution is in your board book under tab 1. Do I have a motion?
So made.
Second?
Second.
Okay. Is there any discussion on the minutes? Any corrections? If not, all those in favor say aye.
Aye.
Opposed? The minutes pass. The next item of business is to recommend the final BFSA 2026-2027 budget and the related 2027-2030 four-year financial plan as presented to us to be approved by the full board. This budget was reviewed in detail at our March meeting. Following this meeting, the proposed budget will be publicly posted for comment. We received no comments after that. The proposed budget and financial plan have been provided under tab 1 in your budget book. I request a motion to recommend the approval of the 2026-2027 budget and the 2027-2030 financial plan by the full board.
So moved.
Okay, second. All right. Is there any discussion? I think we had a good discussion in March. Executive Director Robe, is there anything you would like to say?
No further comments, other than just thank you for your review and your comments, certainly helpful.
Thank you. All those in favor then of the motion, say aye.
Aye.
Opposed? It passes, so you can go ahead with the budget. Is there any other business before for the committee? Any other comments that anyone else wants to make before the committee? Seeing none, I'll accept a motion to adjourn.
Second.
Okay, all those in favor say aye.
Aye.
Opposed? We are adjourned. Thank you, everybody.
The fastest committee.
That's why I moved it to 11:45.
4 minutes.
Okay, we are on and we are live.
All right. Welcome to the June meeting of the Buffalo Fiscal Stability Authority. Thank you for being here. Before we begin, on behalf of the board and the staff, I'd like to welcome Darby Fishkin to our BFSA family and welcome her to her first meeting. We hope it's not too rough on you. Okay. We look forward to working with you and thank you for your public service. Please don't hesitate to ask any questions as we proceed today. I'd also like to take the opportunity to welcome our intern, Penny Shabu. Say hey, boo. Thank you. To this meeting and to the BFSA. We're delighted to have you as a member of our team. I think it's going to be a wonderful learning experience for you. And if you have any questions, please, many of us have been professors, so we can help you out that way.
You know, Mr. Chairman, is it possible for me to take a moment relative to the appointment of Darby Fishkin?
Yes, I wish you would.
First of all, I'm very grateful to be able to share once again a relationship from a professional standpoint with Darby, because reading the resume and so forth, it brought me back to the point where, and I don't know if anybody's aware of this, but I used to know Darby, which used to be an accountant for Ernst & Young, who was the accounting firm that used to work on the City of Buffalo's comprehensive annual financial report. And then upon my election as controller of the City of Buffalo, I happened to reach out to Darby and asked her if she would consider being my deputy controller. And I know in the press release, it talks about her, becoming working for the City of Buffalo. I am the guy who brought her into public service from the private sector, and I'm certainly very grateful that once again, Darby and I can work together as colleagues in public service and so forth. And then upon Darby's move to the private sector, I was very gratified to appoint Jeanette Rosal as my deputy controller for several years. And then when she ended up getting this position with the control board, Darby Fishkin became available once again to fill the vacancy as deputy controller of the City of Buffalo. So I am very honored to be able to share this body and the work that we do with my two former deputy controllers of the City of Buffalo. So that being said, I also want to welcome Darby personally back to where we can both serve in a capacity where we can help out the residents of the City of Buffalo.
Thank you, Andy. And Darby, we won't hold that against you.
Actually, I tried to get her to run for the job after I went to the state.
It's great.
Okay, thank you very much, Chairman.
Okay. Our meeting agenda has been provided to you in your board book. As is our normal practice, we will hold time at the end of the meeting for a privilege of the floor for any individual to speak on matters that we've discussed today. Let's begin today's meeting with Executive Rowe taking the roll call of directors.
Secretary Claus.
Here.
Director Fishkin.
Here.
Director Host.
Here.
Director Keenan.
Here.
Director Sanfilippo.
Here.
Mayor Ryan.
Here.
And County Executive.
Here.
Thank you.
So we have quorum. We'll now move on to our first item of business, which is to approve the BFSA's 2026-2027 budget and the 2027-2030 financial plan. This item was reviewed by the Audit, Budget, and Finance Committee in detail at our March meeting. Following that meeting, the proposed budget was publicly posted for comment. We received no comments. This document is included under tab 1 of your board book, and the accompanying draft resolution is included under tab 2. May I have a motion to approve this item?
So made.
Thank you.
I'll second.
Second. Okay, is there any discussion on the BFSA's budget or financial plan? I will say it sounds a little strange to say we have a financial plan in 2030. We've had. Seeing no discussion, all those in favor say aye.
Aye.
Opposed? The budget and financial plan pass. We'll now move into city items. The next item of business is to review the final adopted budget of the city of Buffalo. The BFSA staff report on this item is provided under tab 3 of your board book, along with a copy of the mayor's submission to Common Council of the final amendments to the recommended budget. Executive can you review this with us, please?
Absolutely, thank you. You can move to the next slide, please. Thanks. So in connection with the negotiations between the mayor's office and Common Council, the mayor filed an amended 26-27 recommended budget with council on May 26, 2026. It was subsequently approved by Common Council by a vote of 5-4 on the same date. The formal adoption date is June 8th, 2026, in the amount of $675 million, which is a reduction from the original recommended budget by $6.1 million. Next slide. So part of the negotiation process really focused on the real property tax levy and reducing that. So the first transaction, so to speak, for the negotiations was to reduce revenues by $16.6 million in 2 areas. The first was the reduction of the property tax levy. The final tax levy as included in the adopted budget is $219.5 million. This is equivalent to a $35.1 million increase in the real property tax levy year over year. The change from the original recommended budget to the adopted budget is a decrease of $11.1 million, which will have a compounding effect over the financial plan. That compounding effect, going through the assumptions that were included in the financial plan of a 9% increase next year and then 5%, is equivalent to a $49 million impact over the financial plan over the next 3 years. Not over the next 3 years, including this year and the next 3 years. This impact will require a revision to the revised financial plan. I've had discussions with the Commissioner of Finance on that. That's in process, and I have that review slated for the July 3rd meeting. Now, I put the schedule on here. There's a lot of, in the media, you see a lot of real property tax increase of 25.8%, 25.8%. What wasn't captured was the real property tax levy in the budget is split between 2 lines. You got the real property tax levy, and then you have the star reimbursement from New York State. Those 2 lines together total the real property tax levy. So it was a 25% proposed increase from year to year. It wasn't 25.8, but I thought it was worth just kind of revisiting or visiting this as to why our reports have been different than what you've seen in the media. Yes.
$5 million piece from
Yes.
the state side. Is that impacted at all on the amount of levy, like what is done locally? In other words,
That's
would raising or lowering that tax levy impact the $5 million one way or another?
It doesn't impact that program. That program, if you purchased your home before a certain date,
2016.
thank you, and you're within certain income levels, you qualify for an exemption, property tax exemption from New York State for school taxes. After a certain date, 2016, thank you. The state started sending checks to the individuals themselves. So this is kind of the leftover bucket, but it depends on an individual's income and when they purchase their house, if they qualify or not on the assessment of their house or the tax levy.
Will
That's
it
a
always
plan.
be a flat $5 million, or will it change with ownership?
It goes down a little bit as time progresses and more homes are sold. because the state changed it. They don't, if you purchase your home after 2016, you get a check directly from the state. It's not on the taxes.
So it's just been higher than 5 million in previous years? Okay.
So it'll always go down, right? As the
Okay.
folks are grandfathered in, pass away or move to other houses, right, it's gonna keep going
And
down.
our plans reflect that decrease.
That's an assumption, right?
Okay, thank you.
Just the two added together equal the tax levy, so.
Gotcha. Okay. Thank you.
The second change was the other financing source that was cited in our review back in May when we met, for restricted revenue of 5.5 million. That has been eliminated in the adopted budget, so that part has been taken care of in connection with these changes right away. So next slide, please. In order to balance these actions, there were, it's split between two areas. You got some revenues were increased and some budgeted appropriations were decreased in order to balance that change. So the first was, there was an increased estimated revenues of 10.5 million. The first is increased revenue from the sale of parking ramps, 4.9 million. Since the initial recommended budget, the appraisal for the sale of the ramps increased because the parking authority put into place increased parking rates effective on July 1st, and that changed the valuation of the parking ramps. So $10 million more is anticipated from the sale of the ramps, which brings this 4.9 million well within the range of reasonableness for this year's budget. The next change was sales tax, which has increased 1.6 million. Budgeted at this level, which totals 124.3 million. It represents an increase over the BFSA's projections for current year sales tax, 2.6 to 2.8%, which is within a reasonable range. So we were comfortable with that change.
Yeah, I'll say on that point, based on how sales tax is going, like I do my own projections for all of that. And originally when I had done projections, I was assuming 5% growth for the final month in June. We're right now at 7.2% growth for the rest of June. So that creating a year-end projection, it still puts their growth in the budget over what I think is a more up-to-date year-end projection, still at only 3%.
Okay. And we're probably a little bit more conservative.
Yeah, well, so right now, like originally with that, it was assuming 5% growth for June. We're at over 7% still. Now, there's one more payment, that's a reconciliation, it could go up or down. But more than likely, they're still gonna exceed that. So they probably, if they had the final number and did 3% growth over the final year-end number, it would still probably be a few $100,000 higher than the modification.
Thank you.
Thank you, Mark. But to that point, in the book, the Office of the New York State Comptroller has a projection on sales tax. And all we've been hearing is the positive numbers on sales tax, which is great. But in the page 7 in that breaks it down by county. It says for the first quarter of the calendar year this year, Erie County was down 5.6%.
Yes, that's actually, that is directly a result of the first quarter reconciliation. Generally speaking, because all of these growth or contractions are based on the prior year. So last year for the first quarter reconciliation, we had 150% growth year over year. So there's nowhere to go but down. So this first quarter reconciliation, I knew it was going to be negative. It was actually less negative than I assumed it would be, which almost ends up a bit of a positive to a degree. But it's always a seesaw effect year over year, especially with those quarterly reconciliations. If one year for that quarter, you have a negative reconciliation, more than likely the following year, it's going to be a positive, and then the year after it's going to be negative, because it's always a proportional impact from that prior year.
Okay, So it just happened that the timing of this.
Yeah. The other thing with, New York State Comptroller reports is, they cite their numbers on a 1 month offset from what we have. So they think about it as cash, but cash when they receive it, which is a month before we receive it. So everything's offset by 1 month. So everything that they say for April is what we received in March, or April is in May. And it's a 1 month offset. You have to kind of reconcile it back to be able to use their numbers. Yeah, it's really, it's not fun.
So these reports are good, but only to a
Yeah.
certain extent. Okay.
Yeah, but the thing you see in them, which has been true at least since the period of time after the post-COVID, and then obviously the Wayfarer versus South Dakota that created internet sales tax, is there's really no rhyme or reason. If you look in those quarterly reports by even counties within a region or region over region, half of them have huge growth, half of them are really negative, and there's just no rhyme or reason to it that you can really find. I haven't been able to find it yet, and I'm still looking.
Thank you.
Yeah, absolutely. Okay, the next tranche that was impacted would be the prior year collections on outstanding fines. Both outstanding parking fines and outstanding traffic violation fines were increased by 2 million. This was an area we discussed in May as being an area it's hard to predict the collectability of something. There's a tool that the city has for outstanding parking fines. So they, through New York State, will have the ability to, I always forget what the word is.
Suspend registration.
Thank you, suspend driver registrations, which is an important tool for the collection of the outstanding parking fines. People, of course, won't want their registrations being suspended. The total amount for parking fines is now budgeted at 4 million, and that represents 43% of total outstanding parking tickets. Do you have a question?
Is that a new system?
So it's not new. However, it had not been actually implemented for a very long time. There was an older piece of software that only ran on Windows XP, did not have service updates in 10 years. So the MIS felt unsafe plugging the computer that could run the software into our network. And so they did like tiny batches here and there. The new software works with regular modern computers. So on a rolling basis, we'll be able to send all those to the New York State DMV to get those suspended.
So how were these numbers arrived at, like 2 million for the park outstanding and 2 million for the traffic violations? What analysis what is that based on?
This is from Commissioner Brown's discussions with Commissioner Booth and looking at treasury and what basically the sheer amount of outstanding stuff, right? So as Jen said, that has us bringing in nearly half of the outstanding items there, but she thinks that that's actually achievable as folks get a nasty letter from New York State saying your registration's been
Two of my
suspended.
questions, do they get a letter, they find out when they get another ticket for having
No, they'll actually get notification from the state.
So there's a possibility then that these numbers may be modest.
Sure.
That could become greater than this.
Jessica's expressed that too. Yeah,
Okay.
because if you look at the total outstanding receivables, it's over 100 million. That includes records too, though, but over 100 million in total. So she feels even with increasing it, the 2 million in each bucket, that it's still a conservative number.
And the same goes on the TVA side of things, where we can actually go for folks' driver's licenses, again, for the outstanding moving violations or other heavier duty issues, right? That's gonna motivate folks to pay up.
I would think it would.
Interesting.
So with respect to traffic violations, it's now budgeted at 6 million with a $2 million increase. That's equal to 54% of outstanding fines. But I will note that if you look at the schedule of everything outstanding in total, it's over 100 million. There's certain buckets where she didn't even report anything to be able to give herself some leeway for the overall collection process. Yes.
And in one case, you are planning on using collection agency and when you're going to do it internally?
Right, for these two, the TVA and the parking, that's handled internally. We do a first pass of collection with Treasury off the bat, and then send things out to a collections agency, which is now under contract. And we just, I think the final thing to get authorized to get sent out to them was water, and I think I just gave Treasury the thumbs up to send that out as well, so.
The traffic
So-
violations will be done internally. I thought, there was a shift to have an outside collection agency.
So
Things like that
TVA has a lot of staff to follow
Okay.
up on that stuff. We bought them up as well a little bit.
Okay,
They got moved, they were kind of like a stepchild under law, and they've been moved under parking.
okay.
So, and with Commissioner Booth's passion for pedestrian and bicycle safety, they're on top of them for getting things moving. Once things go past an outstanding date for the TVA stuff, and we can't, we've already done the efforts at registration license suspensions and things like that, and traffic court, then I think we have an option to send it out to collections, but the actual TVA office is more effective at, I think, getting some of that stuff.
When you go to collection, do you pay them based on what they collect?
Yes.
What kind of percentage is that?
Let's see if I have the email from Mr. Siemens.
But that's the cost of it. There's not another cost. You don't pay them unless they collect.
Exactly, that's right. I don't see any here. I meant to talk to him about it. But yeah, I had the same question when I was asking about what agency we're using. So I can certainly get that for you.
And then what percentage they're taking
Hmm.
off the collectible?
Yeah.
They're getting that, I'll move on to
Yes.
the next bucket, which is a budget balancing actions, is to reduce budgeted appropriations. And this can be broken down even further into three categories. We put it into three categories. The first is for reductions to capital outlay for projects that are intended to be included in future bond sales. This totals 2.8 million, and I listed the different projects that were included in that category. The second bucket is just general reductions to budgeted spending of 3.35 million. This is all within the Division of Public Works. There is, I did want to comment on the equipment maintenance contracts. It is $1 million less than what was originally budgeted, but it's 500,000 more year to year. So they didn't get to as far as they wanted to with the budget, but they were able to provide more funding within that line item. Same thing with the equipment of 950,000. That particular line is for unexpected needs or emergency needs, and that has been handled in past years through budget transfers from other areas within DPW. That is the intent to continue that practice in lieu of having the budgeted amount in the event that is needed. So that category equals 3.35 million. And then there's just a combination of these other minor changes, which is a net increase of 37,000. The two big pieces is the elimination of 2 vacant positions, which totaled 179,000. And there was an increase to the summer youth program for 222,000. That was part of the negotiations with council to reach an agreement. Thank you. So in summary, as I mentioned, a revised 2730 financial plan is required to be consistent with the budget. That's in process. And then subsequent to the adoption of the city budget, 2 material items came to our attention. The first is the state enacted budget, which provides 25 million of additional non-recurring state aid to the city of Buffalo. That addresses, there's 25.8 million that we compiled in our review of the budget that were questionable, uncertain revenues and expenditures. This is an unbudgeted revenue and it would cover that particular potential gap. So that need for that gap plan is now eliminated. The second item that came to our attention is the inability for the city of Buffalo to enter into a revenue sharing agreement with the parking enterprise fund. Municipal enterprise fund, it's an IRS regulation. So that can't happen anymore. However, what is possible is for the parking ramp to reimburse the general fund for expenses that are incurred on behalf of the parking authority. And that is being pulled together now in connection with the bond sale. So the budget may require modification for parking revenue if it's determined that the amount can't be substantially offset by reimbursable expenditures. And the final finding was that BFSA, as always, will continue to closely monitor actual results against the budget.
Yes, I can ask Ben just a quick question. Does council understand all of the intricacies of the last three things we've talked about? I mean, is there an understanding they can't use the $25 million for something else, that it isn't, that it's here only to close the gap? Is that your understanding?
At least in terms of my final negotiations with council leadership, they were all on the same page in terms of feeling that that was to be held as a conservative amount and then be used to replenish fund balance if things come in as expected, right? So I think we actually do have to find that that's going to be treated conservatively by them. On the revenue sharing agreement, that came up when I had to present the various authorizing resolutions between the city, the authority, and BCAR. I was very clear about that. There were some questions because, again, the council explicitly put in the enacting legislation that there was to be a revenue sharing agreement. So we actually had to approve a revenue sharing agreement at a $0 amount. That's some of the questions about what I just said. So IRS regs, the authorities taking on the benefits and burdens of operating the ramps. Therefore, the city doesn't get the excess revenue. That's part of the benefit side of things. So there's analysis there as well. We'll be incorporating those changes into the 4-year plan that we're working on right now. I'd say on the positive side, and I don't know if this came through completely with the media coverage with the additional 25 million, is our final conversations with the assembly and state budget officers that this is to be a new baseline. So that is the governor's position that this is a new baseline for aim to the cities that were benefited with that funding. So that's obviously enormously helpful for us in the long term.
So then that's not non-recurrent. That's what I mean.
Yeah, so it's not-
non-recurrent.
That's okay, yeah.
But that would not be.
Now, that being said, we were also very clear in council negotiations that if we were every percent we took away from the 25% levy increase, and the out years were likely to have additional higher percents. Mayor was extremely clear, everyone he spoke to, that by every percent we negotiated down would bring more pain in the out years.
So Ben, I'm sorry, so but if it's going to become a recurring revenue.
Yeah.
At that same level, 25 million?
Well, it's actually more, it's really 40 million, right? So the 25 was that last chunk that came in from the final negotiations. Then there's been the kind of up in the air 5 million enhancing, right? That's been going on for some time now. Then there was the 10 million that was part of the governor's 30-day amendments. And now this additional 25. So it's some total of 40 million.
Okay, and that 40 million, you believe is going to be a recurring revenue?
Is that by legislation or by?
So they're not allowed to, how to put it, to like, here, right?
You know, I had to do a year
Right,
plan.
Exactly, yeah.
So it's.
Well, I think we just have to be a little bit more careful with that as well. We're giving in one hand the big
Someone's
beautiful,
gonna pay for it.
well, the big beautiful bill, which is looking at about a $7.8 billion cut in Medicaid. And then you look at the cuts to Title I and Title III for school aid. We're looking at a huge cut to the New York State revenue that they're going to somehow have to, in the next budget, adjust. So, well, it's great that we're getting this additional aim with the idea of
It's
it
coming
being,
from somebody else.
it's
Like
there.
the counties.
We need to be, I think we need to be cognizant that we can't just take a deep breath and say that we're not going into really difficult times next year. And that, whatever we can do now is gonna be important. I just think people need to realize
So,
that.
I was frankly shocked by the final news. We're very pleased about it, as well as the various comments on this being a new base level, but yeah, to Fred's point, obviously, it's.
Yeah, you're feeling a little more certain about using it in the out years as a projection.
Yeah.
But it's always subject to
But it's-
legislative.
Right, and we're still taking the need for normalizing the tax levy very seriously. And then on the negative side, days are ticking down here. The gaming compact, payment, which we said was coming, but until I actually see the money show up, I'll be nervous about that. So we're chasing that down with our all lobbyist right now. So.
Yeah.
Go ahead.
Go ahead, Tom. If you don't mind, can I ask a few questions about the city budget, kind of in general, before we go off of it?
Yeah.
Go on to other things.
I'm gonna have one.
Yeah, I have.
It's okay. We'll just go down the line.
Okay. Okay. Was I starting with one of the things that got cut was the road supplies for LED conversion, 1.6 million. Is that correct, that was about a 1-year payback?
Oh, you have asked for that. So we have, separately after this passed, we met with the controller's office and we requested, essentially a second bonding package of basically emergency items. So since we came in, Commissioner Skipper and our new senior deputy commissioner for DPW, Marie Crone, who's an architect, we're going on to every city facility and she's been identifying key emergency repairs for things that are like life safety hazards that she wants to get addressed as fast as possible. And so our offer to the 12th floor essentially is you can nuke basically the entire amount of the unspent, the bulk of the 2025 non-authorized but non-bonded capital projects, as well as there's a huge list of prior year authorized but unspent projects as well that we've had DPW going through. We're willing to close those out, wrap those up. We're not going to bond for those in exchange for them being willing to go to the council with a resolution authorizing a chunk of emergency capital projects, these life safety issues. So one chunk for actual things we could get spent right away that don't need planning, another chunk that for things that need AE work to get rolled out. And included in that, we would like to do the LED conversion because we have this offer from National Grid to get it done. They'll hire 8 to 9 crew members, just get rolling on it and get the remaining roughly 2/3 of the National Grid owned lights in the city that are incandescent over to LED.
So you have to pay to convert them, and then that will reduce your electric bill by the amount that you pay to convert them
At
within a
least.
year.
Yes, right.
All right, so that is moving forward. Good.
Again, it's going to be up to the willingness of the controller to engage in a second bond sale, but we think we made a very reasonable offer in terms of closing prior projects and freeing up that service in order to effectuate things that we think are more seriously needed.
Moving on to another topic then, the tier 6 revisions that the state passed for pension.
Yeah.
Are you able to determine yet what impact?
We've been asking OSC. As soon as I saw that news pass over, I texted my OSC contact right away. Hey, you guys have breakdowns for municipalities? So we eagerly await. I know, yeah. I saw some figures thrown out there in city and state, but I don't know where those were derived from. So we're not sure.
In theory, the good news, and not good news for everybody, but the good news is the most costly to localities are going to be the changes only affecting teachers.
Yeah.
Because that is the change from retirement at 62 to 58, which is going to really change the actuarial assessment year over year, where the rest of us don't have the teachers. Right. So the shift in the employee rate, so it's going from 6% to 5.75, 5 to 4, 4 to 3, and 3 to 3. That is going to put money in the pockets of employees, but because all of that is done actuarially, there's no retro related to that. It's always going forward. But secondly, it's unclear that is going to force any of the other payers into the system for their share to rise by an equitable amount. But my understanding through NISAC is that in the estimated pension bills that we get for 26-27, so the current year if you're prepaying or next year if you're not, that we get in about July 15th, theoretically are going to include the pension change in them. So you should be able to look at the projected pension bill you got last September versus this estimate, and that should be able to give you a big idea of if you're really impacted by this or not.
I mean, and the other thing that's gonna cover this, particularly for the school district, is that as older teachers retire and you're hiring younger teachers at a lower salary, the actual cost actually could be a net positive, not a net negative.
And the investment rate has been great, so that often smooths out some of the
what's
gaps in it, so.
Yes.
I can tell you, Director Keaton, my biggest concern is the changes for police and fire calculations,
Mm.
because they
For-
raised the cap on the
Yeah.
amount of overtime that is eligible for your calculation.
It's only like $7,000, so I just don't know how material that's gonna end up becoming. But that's gonna be the big one that
Those
goes
are
right
my
now.
overtime. See how that.
I just want to stress the teacher thing will not be good.
Yeah.
We'll see. We'll see.
And-
Go ahead.
And then two things that, I probably should know, but if you could refresh my memory. One was the garbage fund repaying the city. Will that happen in is that going to start happening in 26,
Will
27?
indeed, 5-year plan, get it paid down, yep.
There's a piece in 26, 27, and the other one was the replacing the rainy day fund. Was there an appropriation in 26, 27, or is that going?
Not directly in the budget, so again, we're hoping to have a very modest positive surplus for this year. And then ultimately, if our numbers are correct, or at least partially correct on some of the questionable revenues that you folks highlighted at the last meeting, and we get the additional 25 million from New York State, that will begin to get us to a place for possibly a rapid replenishment of the rainy day fund up to the charter minimums. And we can begin moving back over to unassigned.
I appreciate the way you're hitting some of these big items.
Do you mind if I ask you a question?
Sure, go ahead.
If we start planning on both our 4-year plans, but also our cash flows for next year,
Yeah.
just big picture. With the 25 million, you'll be able to close your gap in 25, 26?
Yeah, it's a combination of that, but think of it as actually nearly $70 million. Of the 70, 55 is gonna come in the form of this, it's like a letter we got basically from the state budget office where we have to say that like, we're not gonna fire cops and firemen, right, that kind of thing. That payment's gonna come pretty freaking quickly, it sounds like.
Okay.
So in terms of cash wise, that should be in the bank, certainly in time for us to close our fiscal year in August. So
Okay.
I'm guessing at some point in July, that's gonna get transferred over from OSC. The rest of the money will come in the standard October AIM payment.
Okay. Yep. And then for next year, you're looking at what kind of deficit or surplus?
For 26, 27.
Yes.
So if we hit our revenue targets for some of the ones that were, questioned here, including some of the prior collections, the interim auction goes well, and so on and so forth. That actually, let's say we hit every single one of those, then we'd actually have a positive variance of like $25 million.
Good luck. That's great.
Thank you.
Thanks for
Right.
that big picture. That's all I need.
Right.
That's
So based on the timing of what revenues the city's gonna get versus what revenues the Board of Education is gonna get, there probably won't be a need to do any sort of RAND borrowing for cash flow needs.
I think for 26, 27, I think we can avoid a RAN or a ban, yeah.
And that's what we're trying to ballpark right now with my questions. I know where ours will be. I just need to be a little more educated on where the city will be.
The year after that, I would not commit to it, but
But that's with the assumption that there's no change in any of the contracts that are outstanding, which
well,
could
even still, look, we have,
dramatically change.
it could, we have 6 million set aside, right,
Sure.
for some chunk of raises. We have a plan of sequencing kicking off in July of negotiations.
Sure.
We'll start knocking them out. We've also had extremely good talks with LMHF. LMHF is going to be willing to take on individual bargaining units as opposed to the city as a whole. So that's going to be very helpful there. LMHF is also willing to work with other union partners to directly engage with our unions. So folks can talk union to union about the benefits of LMHF.
LMHF is.
Labor Management Healthcare Fund, it was the county created it in 2005.
Yeah.
So it's essentially, they're the largest insurance buyer in the area. It's a consortium of,
15, 20 members.
yeah, the county and sub areas, different towns, villages, cities, schools, school districts.
No, yeah, no village, because you
No
have to
village,
have
no.
a cap on, the amount of employees, but
Yeah.
you have the Erie County Water Authority, you have off-track vetting,
ECC, ECMC.
Is that done through independent health or?
no, Univer,
Univer.
well, pharmacy benefits are still through independent health.
Okay.
But yeah,
And they have to be negotiated. Anything that they can provide has to be negotiated with you to agree to.
Yes, they have almost like a formulary that we would try and copycat the county.
yeah, and what they can do is they can mimic whatever the plan you want, just at likely a better cost often. So one of the things I think the city should probably be striving towards is maybe right-sizing the, to not steal, Fred's thunder here is right-sizing the employee share versus single and family and not have that the wrong way.
And it mimics what the state does with its major unions too, is they negotiate separate contracts, but all come together to negotiate one healthcare.
We would strive to copy the county,
Yeah.
the core plan.
I just want to make one quick observation as it relates to cash flow. Does the state, or does the city controller's office provide the control board with its monthly actual cash flow projections and going into next year?
The file of the council, everyone. Yeah.
I know how it works, Marion.
Yeah, because I know it's. they
We
give the
send it
city-
to the controller, Greg grabs it from the city, and then he does send the consolidated report
Okay,
to, Jen, I believe you're on that.
To, at least council. I
Yes,
usually
and
go for
and
council.
the BFS, you do get a copy. I don't know how official it is. It comes from Greg.
and then I just have just a random budget question, relative to, litigation. And, I don't know what is budgeted in the current year or the out years, but, do we have an idea as to where we stand as relates to potential unsolved or unsettled lawsuits?
Lawsuits, yeah, we have a little schedule from Rosa here.
Are you talking about big lawsuits?
I'm talking about whatever exposure that the city could have in the way of.
Budgeted 5 million this year, 5 million next year, and then we have some larger lawsuits we anticipate bonding.
Okay,
About
so what is the
35 million.
total amount of lawsuits that are already on file and what you project or anticipate? What's the dollar amount you think that of exposure?
Next year is 5 million that we budgeted, and then the following year.
It will cover the lawsuits?
Hopefully, yeah, because we're bonding some of the bigger ones.
And what are the bigger ones? Just
Can't say exactly what they are. I can just can't tell you it's about 35 million total.
35 million.
Yeah, I won't get into the details.
Okay, and that's maybe, is that like 4 lawsuits or is
Two.
it's 2? All right, so we're anticipating the possibility. I'm not a lawyer. All I want to know is, what exposure does the city have, going forward or projecting? Especially when you give us your plans for the next 4 or 5 years, what you may expect in the way of liability.
New Corporation Council is trying to build out the law department to have more attorneys to avoid lawsuits that probably could have been lower before.
Mhm.
We're paying kind of from old lawsuits now. So she's trying to develop that department, so we kept the budget at 5 million.
Okay, yeah, I actually, it's less about what's budgeted versus what what going forward, the potential exposure of these lawsuits.
And so,
There's a major one starting off now, but
so the debt service on the bonds are part of the 5 million and you've included some sort of expectation
the 5 million for settlements there.
for settlements.
That service on any settlement bonds. or-
But once you bond, you gotta pay them back, so.
That's the judgment claim. That's
Yeah, that would go into the overall.
And if I could just add to that, as you're looking at your law department, one of the things that I've noticed is that you haven't had experts, whether they be forensic accountants and economists, occupational therapists or people that do life care plans as part of some of these. And just my review of looking at those, that a number of the settlements would have really benefited from my perspective if they'd had somebody who had been looking at those things. And I would just suggest to you that it's something that you need to think about, and I'm more than happy to talk to you about how that all works.
And we did budget for that in the upcoming year, because Rosa realized that was an issue.
It's, yeah, I mean, a couple of the large ones, it was dramatic looking at what the ask was and what the needs were and whether or not, and how we dealt with that, I thought was problematic. So we can talk about that, you know.
So I had a question. This may be a quasi-legal question, than anything, is what is the nuance difference here, or is there one, between an amended 26-27 recommended budget and the council just doing their amendment to the budget? And the reason I ask is because this process that just undertook, increased revenues quite a bit, and that if it's part of the council's process, that would have been a violation of the charter. You can't, I mean, for the county, we can't do that.
So
And I'm pretty sure
that's, so that's exactly why it had to be handled this way. Only the mayor can modify.
Okay, is that a thing like in the charter where you can put out a recommended budget and then re-recommend a new version of the budget?
Yes, we went back and forth on this a lot, and actually this occurred twice during this process. The first was when I included an AAV book that was not well met, and we pulled that out and refiled it without the V book, and then again this amended package here.
So
we
with that,
actually think this is probably, apparently this it is in some instances how it's been handled previously, but never as cleanly or as deliberately. So we think we actually did it. This is probably the most proper way it's been handled yet in terms of the actual sequencing and it coming under the mayor's cover as an amendment rather than with a council sponsor. Because in the past, sometimes the council president would wander up at like the 11th hour to the mayor's office. Here's another package, and then they go take it down to their members, but it would get filed under a council member's name, and sometimes I think it would include revenue adjustments as well, which I would say are a little. So if you're right on that, so we actually, I think we did this the correct way.
So the sort of concern that raises, and I will take one of your favorite mannerisms, is this going to be a shift to the Overton window? Is this now the new norm where there is almost going to be like a soft launch of the proposed budget to kind of gauge the temperature, and then the real budget comes out later? And because the fear here is when you're adjusting revenues, and part of the reason most charters don't allow for adjustment of revenues is it allows for a little bit of an easy button decision making. If the council or someone doesn't like what they see, instead of doing the hard thing, which is maybe cutting expenses, we can just jack up revenues. So that's a little bit of the concern I have about, like, is this going to be sort of this new norm of going forward? And then, like, so for instance, next year, like, we know that, and you had mentioned, and I know that the mayor's mentioned this to the council, is if you reduce the property tax levy increase this year, it's likely going to lead to shifting that later. What's to say that we, even if the mayor says this every day between now and then, that you release the next year's budget that has a property tax increase that is higher than what was in the original 4-year plan accordingly, and the council feigns that this is brand new information, and everybody, goes through this same process, and then we jack up revenues again, and then to lower the property tax increase, and then it keeps on kicking the can down the line.
We always have in our back pocket a default budget, right? And that is the hammer that goes along with it. And that we were completely prepared to go for a default budget. I honestly thought that probably would be what happened, but we were able to put together. But we always wanted it to. It's better if the council comes along for the ride, if it's a compromise, right? So we were able to actually make great work, get that together at the last minute. So.
Yeah, and I want to preface, preface that would have been before, but I want to reiterate, like, this isn't a criticism of the new administration. I genuinely think that this is the, most structurally sound budget that this board has considered in a long time, based on the, gap closure plan and all of those things where, where there may be some.
Increase in state aid.
Yeah, well, but that's some of it too, like, but there, while there are optimistic projections here, we're not confronted with the same number of leaps of faith that I think we maybe have had in the past. I'm just concerned, like, with the way this process played out and a lot of the comments made by the council seemed as though they haven't been members of the council for the past decade or so. And I'm just worried that they're going to have that selective amnesia, going forward. And that would just.
Sure, but we also heard from a lot of council members who fully understood the severity of the situation and wanted to work with us on a compromise. So, I'm optimistic. And again, in our 4-year plan, we'll be addressing some of the concerns raised here and making sure we're in good shape for the out years too, by taking, again, additional level increases seriously because of the show up here. And from the public's perspective, again, our office received no calls since the budget passed from taxpayers concerned about their bills. We updated the tax calculator online so folks could see what the new bills would be. I heard from one council member with somebody calling them who was quite irate and then asked for her address. She put it into the calculator and it's like, okay, going up $2 a month. She's like, oh, that's amazing. I love this project. So I really, when folks, because of the nature of Buffalo's budget being so extraordinarily low, when folks see the actual impact on their bills, when they get their bills, if they get it directly in July or off their escrow, I really don't think there's going to be that much pushback.
Then we have a ways to go.
And we have a ways to go, and also folks will be seeing some of the actual investments hitting the street very soon. Just to open the bids for hot patch items, so we're actually delivering on the items. We're going to have our garbage truck fleet should be fully up to speed by the fall. Plows will be in good shape. Just little things like that will help public see the modest investments for them.
Darby, we don't want to skip over you if you have
No, I think
questions.
I'm more curious on them for you.
Okay. All right, Jeanette, do you have any?
No, that summarized my comments on it.
Okay, great, thank you. So this resolution will be considered after we review the district's budget. We'll now review the third quarter report for the city of Buffalo. The BFSA staff report on this item is provided under tab 3 of your board book. Bryce, will you review this with us?
Absolutely, thank you. We can just watch out, you're about to take out that plug. All right, good afternoon, thank you for giving me the opportunity to address the board today. Quick review of the city's third quarter report as of March 31st. At the end of the third quarter, the city revenues were projected to be favorable by 54.3 million, 8.7% increase, and the expenditures were projected to be unfavorable by 55.8 million, unfavorable variance of 9%, which led to a deficit of 1.6 million. The city is utilizing 2.6 million in restricted fund balance for capital purposes, which reduces that or flips that projected deficit to a surplus of $1 million. Now, there are some nuances between the revenues and expenditures, and we will address those as we go through this presentation. Before I move into that, I do want to recognize the budget modification that was adopted on May 26th for $38 million. There was an additional $38 million in expenditures that can be broken out by about 17.9 million in fringe benefits. That was the police and fire retirement system contribution, active employee health insurance, increase of 17.1 million in personal service car costs. That's driven by overtime in police, fire, as well as public works. Increase of 2.4 million in services, and then 600,000 supplies. City had an additional 38 million they had to address, and the corresponding revenue to address those overages were 30 million from the state in the miscellaneous financial assistance, which I believe is a one-off, which is not feeding into the reoccurring aim that we just discussed. So that's a one-off. There may be a little timing concern just between June 30th or pre or post June 30th when the city receives that. An additional 4.5 million for sales tax, and then an increase of 3.5 million from transfer in from special revenue fund accounts. So the city identified the revenues to address their overages on the expenditures. Next slide we have here are the revenue sources, intergovernmental taxes, service charges. Total departmental revenues are expected to be 49.3 million favorable year end. The additional 5 million from the transfers in, and then the 2.6 million for the use of fund balance. So in total, it's an increase of 54.3 million to the adopted budget. So the largest part is going to be the intergovernmental funds, 56.1 million there. 20.1 million is really the ARPA dollars. Those flow in and then they're transferred out. So you just eliminate those all out of there. There's the increase of 30 million for the New York State miscellaneous, and then sales tax is trending, as we discussed earlier, to be favorable by 6.6 million by year end. There is a 2.9 million unfavorable variance in taxes and unfavorable variances in the occupancy tax of 2.1 million, as well as a 1 million for property tax. Unfavorable variance 2.3 million in interest, unfavorable variance of 1.1 million fines, and then a $500,000 not unfavorable variance in remaining revenue lines, offset by the 5 million from the transfers in. I believe Commissioner Brown really identified some special revenue funds where grants and repayments for winter storms were held, and she was able to sweep those in to address this budget at this time. And then
I had one quick question. On the 6.6 million favorable for sales tax, that's before the $4.5 million modification, correct? Or is that after? Because they did the modification in May to increase their budget for sales tax by 4.5 million. Is that including or excluding?
The 6.6 is projected for June 30th, 26 for this current fiscal year end.
but it's part of
So
the
we're looking
fourth.
at 2 different years.
Yeah, but they raised the budget. Okay,
So about 2.1.
okay. I just wanted to make sure because if that kind of lines up what I was
Budget
thinking. If it
modifications
was
recognizing 4.5 of the 6.6.
Gotcha,
Because this
okay.
was done. The modification went in early May, and subsequently we've had another 2 to 3.
Okay, perfect. That's what I wanted to confirm. I didn't know if that was
We didn't use all.
Yeah, it's more of a timing.
Very unfavorable balance on interest is paying down on the ARPA funds or
Oh,
what?
it's a combination of those factors. Yes, the city is spending, getting the ARPA funds out, so that balance is decreasing.
Right.
Interest rates decrease based compared to when the original plan was put together and what the assumptions were under that. For the 25.
Interest rates are rising. Where did we?
No, going back to last year, back
Okay.
to when it was
Okay.
adopted, April of 2020.
we're getting like 3.8 on the T-bills that we're doing right now, which, up until like 6 months ago, we were still at about 5. So
Yeah, okay.
And mind you, this budget is split between 2 administrations. It was adopted under one with different
Right.
assumptions,
Okay,
and the current administration's
Yeah.
living with those.
okay. Thank you.
And then we have the 2.6 million from the restricted fund balance for capital to address some capital needs of public works. Next slide, we're just looking at the 15 departments and where they are expenditure wise. In total, it's going to be unfavorable to budget by 10.2 million. The largest areas are going to be in public works at 5.1, fire at 3.9, police 2.8, and mayor and executive 4.1. We'll get in a little detail here. So that 10.2, the unfavorable 10.2 can be broken out in public works. 3.1 million unfavorable variance for capital work, which kind of ties back to that utilization of the 2.6 million for the restricted capital piece. 2.6 million unfavorable for purchase of vehicles. unfavorable in street sanitation of 1.4, but then there's a favorable variance in vacancy savings of 2.6 million. So this is really going back to two different administrations and where their priorities are and how they're trying to target their expenditures. Going to the fire department, unfavorable by 3.9 million. The largest piece of that is the overtime at 5.8 million. There is a 5.7 million unfavorable variance for duty disability, which is going to be offset by a $9 million favorable variance for vacancy savings. Those are the unfilled positions. Police department, there is a 7.2 million unfavorable variance for overtime, 4.4 million unfavorable for duty disability, which is going to be offset by a 9.3 million favorable variance in, vacancy savings, which gets you to an unfavorable variance of 2.8. Unfavorable variance in the mayor and executive department is really related to the purchase of the public works campus at 5.5. You see the unfavorable at 4.1. So those vacancy savings are really addressing that. And then the remaining 11 departments provide a 5.6 million net favorable variance, largely through unfilled positions. Vacancy savings.
So what's the plan with police and fire?
Classes. So-
As far as, so we have.
Yeah, for the vacancies, yeah,
Right.
in the classes, right? So, police completely exhausted, they need to do a full new recruitment push. Fire could probably squeeze out one more academy class, as they have, after that, they got to push. So, the mayor has directed Deputy Mayor Lucy to work on a vast joint recruitment campaign for both, like, essentially sign up for police or fire or both tests, right? At a regional level, you know, billboards, radio ads, the whole thing, trying to get a large diverse pool in. We are also, I am pushing hard for, the city has acted like to just take the test, you need to be a Buffalo resident, which as far as I can tell is unconstitutional based on several SCOTUS cases from Philadelphia. So I'm pushing something on that. And we're also not using that weird test company, we're just using your test, Tim, so that'll save some money as well. So that's the plan, but we're really looking at final fire class in the fall, and then hopefully get some of the advertising and get planning for those tests in the fall as well, so they can have tests in the winter of 27 and get some classes cranking later that year. But yeah, it's a lot of vacancies
For police.
for police and fire, frankly. And as Fred noted, you know, we got getting newer guys, they're in tier 6, you know, less expensive, around the pay scale. It's probably cheaper than the overtime, especially with some of the overtime changes, so.
Ben, you know, I'm not familiar with how that whole process works to try to get recruitment classes up and running. Is there a I mean, how does this all work? I mean, we've had vacancies for decades or years. And I don't know, you know, what the delays are or what procrastination is taking place that we can't get these classes regularly or ongoing. And like I said, I'm not familiar with how it works.
Yeah.
And I didn't know why does it take so long to get a recruitment program in place?
Yeah, I don't really get it either. I don't love to haul ass on it. Okay, I agree. Yeah.
Maybe you should answer this.
Maybe I should. And so when we talk about police, I think we've seen a huge decrease in interest for individuals to come into that profession. So that's a whole nother thing. But so on the state level, what we've done to help with localities, we've increased the frequency in which we offer the examinations, which would allow them to feed into the academy going quicker. So that change was done in the last couple of years. Talking to folks about, hey, they're having this recruitment difficulty. So allowing them to hold the tests more frequently will allow them to get those recruiting classes.
You know, with fire too?
Fire, I'm not sure. We focused more on police because that's been the biggest issue we've seen across the state.
When was the last time the city of Buffalo had a recruitment class?
For police, it was about 4 years ago.
4 years?
Because the last class that was hired in January, 5 individuals, they were off that last role. So taking a step back for the municipality, it takes them 3 to 6 months for the city of Buffalo. If they say, hey, we want to offer the exam on July 1st, they need to start planning in January, get the outside agents or company to come in, agree to it, schedule it, and then offer it. Now in Buffalo, due to some contract negotiations, they really focused on the city residency. So even that limited their pool. So once you even offer the exam, say July 1st, by the time it's graded and you go through the corresponding agility and psych, you're looking October, November. And then for police, they're going through the Erie County Academy, which is twice a year, January and July. So even by offering in October, they might not even have a candidate list that they could start in January 1st. So some of it's timing and just the way the process works. And that's why they kind of ended up in this position where they do not have a candidate list that's valid, and they really need to either use the state civil service.
Which we've been in discussions.
But 4 years,
That was the last time it was offered.
Well, there does seem
who's
to
supposed
be,
to institute or pursue this, program of recruitment?
COVID really screwed this up. I mean, we forget, it's post-COVID, this has completely fallen off the list. So, because you just couldn't do the kinds of things that you were gonna do. And then, as Tim has said, what we're noticing at the colleges and universities is that one of the largest drops in majors is criminal justice. So people are not going into it as they used to go into it in the past too. So there is a change in who wants to do this and everything that goes along with it.
But to your point, there have been other localities since COVID that have had academies and all this stuff. Smaller recruiting classes, but still they operate. So we could,
Something hasn't been done in 4 years. You just have to measure or weigh in. What is the priority? Pay more overtime? Or trying to get more police out or police and fire out on the streets?
it's always
About
better,
public protection.
right? It's always
Yeah.
better to balance that staffing so you're not getting the burnout, the lawsuits and all that.
Well, and we've said for a while, they need to look at how to optimize overtime. There's a trade-off between paying more for benefits and other things in overtime. And I think we've even suggested that there needs to be costs to organizations that are using our police and fire, and that they need to be paying more for that to try to fix some of this. But it's obvious that what the city has been doing for a long time is using these vacancies to pay for their overtime to try to balance their budget.
Mhm.
And that was an obvious strategy. Now it's gone too far and they've lost any list of and being able to control that anymore. And now we've got to figure out how to get back there.
But from a public safety standpoint, based on seniority, don't the oldest guys get the benefit of getting the overtime? And they're probably the least likely guys to be climbing up the ladder. I mean, so I'm talking about protection.
You know how it works.
Yeah, so I mean, if you're looking at a seniority list and
They're high on the wheel.
the higher guy on the wheel gets the overtime, but he's the guy sitting on the truck, turning the siren on or something. I'm being facetious, however, I think about, who's actually gonna be fighting the fire or making an arrest. Is the lower paid guy, because he's not getting the overtime, I think that someone's getting overtime. I'm sorry.
So I do know.
That's just an observation.
I do know that we have millions of viewers that watch this, so I just want to make it clear, we appreciate the work for police and fire do.
Well, so do I.
We're not, no, I'm saying we, collectively, we're not diminishing that, we just have.
Well, that's what I'm worried about, public safety and the ability of.
And Andy, to address some of your concern, it really takes some strategic planning to think out those 3, 5, 20+ years. Because, for example, in 2021, they had a class of 55 that came in. Those 55 individuals now have their 25 years and can move on. So effectively, you should be thinking 3 years ago, how are we replacing those 55?
Exactly.
It's setting up a timeline, working with HR,
Exactly.
and knowing how to replace.
You gotta get it.
I mean, it's
You gotta fill it out.
inexcusable. It's inexcusable. Pandemic or no pandemic.
mean, though, I think what Ben was mentioning actually may have a bigger impact than maybe we would anticipate, is making it clear that you don't have to be a city resident to take the test. I mean, that seems, I understand residency requirements and all of that, but it seems like that you should have to be the resident if you have the job, not just to think about having the job.
Right, and you get 6 months to move.
Yeah, and to have, a period of time to be able to do that, or some, extensions or waivers. And that may generate some people to try it out and decide whether they wanna,
Move into the city.
And in regards
As you said.
to your
Once you get
comment,
the job, oh, I'm sorry.
I was just gonna say, there were cases where individuals were from Buffalo on military deployment, wanted to take the exam, but were unable to, or took it, and then they came back saying, well, you're not currently a resident because you're in the Philippines, or you're at college, you're not a resident, and so they were excluded from that. So that has occurred.
All right, so, I don't know who the corporation council is, but, so Ben, how are you working on that? Because that is ridiculous, where in order just to take the exam, you gotta be a city resident. That's unbelievable. Yeah, okay, let's say you take the exam, you pass, say, okay, we're offering you a position, however, you gotta live in the city for whatever it is, 3 years, 5 years, whatever.
Yeah.
Then they make the choice, but, to not be able to take the exam is ridiculous.
So they've been working closely with, New York State Municipal Service Division that is encompassed inside.
Like, well, who makes that, where did that come from?
Yeah, I guess, is
I don't know if
that
that's a
actually
local-
a rule law, or is that just a
That was the
inconvenient assumption?
Byron imposed concept, I think probably because they were like afraid, oh, we'll bring someone in who lives in Amherst, and then we'll move to the city, then we'll have to kick them out, we already spent all this money training them, right? But
So the state has certain
given the overall
standards,
pool of people that's available, like the Commissioner was saying, you gotta recruit regionally these days.
and that's what most, public safety departments are doing across the state. They're trying to expand that. But- So real quick, when we get off, the state has certain jurisdiction and guidelines that were put in place, but then when it comes to local, they can have their local rules and that type of stuff that impacts residency requirements and that type of stuff.
I will note, just my personal take, Amherst recently adopted a modification to their residency requirement to a residence preference. I thought was pretty smart. So you try and make your first best effort to hire someone that lives inside the jurisdiction, and then you can move to a preference so you can't hire anybody. When it comes to certain high skill jobs, be it PEs or more specific things, attorneys, whatever, you do have a really hard time finding folks, right?
Isn't
So
there a sort of a waiver process also that is undertaken?
it's only for 6 months.
6
You
months.
get 2
Oh, so that's all it is.
That's all
It's
it
a
is.
waiver for.
Yeah.
Because there's something to be said for in instances where you cannot find someone for a position that meets the residency requirement. Now, there's probably some thresholds you gotta meet, because I can see that potentially being used, but if the choice is vacant job being just there, and once you find somebody who lives in the city versus filling a job, like the important part should be filling the position.
It's not always that straightforward. Yeah, of course, it's simple.
And piggybacking on some of this, obviously, working with the unions that have folks who are already working with us who may know other people who they could recruit is probably a strong thing that we should recommend as well. Is
Incentives and that type of stuff given to area offices.
Yes.
yeah. As we go. All right, Bryce, do you have more?
Let me take a drink.
Well, we saw him take a drink. That's okay.
Moving on to general charges. In regards to the general fund, total general charges are unfavorable by 25.5 million, 11.1%. Large driver there is fringe benefits at 27.6 million, as well as outside services at 1.4 million. Transfers out are on, so total general fund, and when you take departmental expenditures and general charges, is unfavorable by 35.7 million.
Do we know why fringes are so off the estimate?
The big piece, about almost 14 million, was the accrual for the police and fire retirement system. It was budgeted incorrectly this past year. That was the largest one, and then there was about 4.5 million for retiree health
So
insurance.
we want to be clear that that's not the tier 6 changes.
No, it has nothing to
This is
do with
already
that.
passed.
No, it's just, and we highlighted this during the transition, and I think some of our earliest meetings with you folks, that we assumed there would be a shortfall
Yeah.
in both healthcare and pension.
And why was last year's number off by so much? Does,
It was election year.
do we receive the information from the state early enough before we adopt a budget?
Yes, we included that down to the penny. Commissioner Brown put it in our budget down to the penny, the actual number from OSC. Yep.
So you're saying it was under budgeted
Yes.
by that much intentionally?
They didn't want to do a big tax increase in the election year.
And isn't that part of the role of Buffalo Fiscal Stability Authority to look at those numbers? So did we have the information at the time?
We did not. I did not get the invoice until December. Second order.
So, but the city had it?
Yes.
I mean, how do we know that the 26-27 pension number is correct? Is there,
I have a copy of that pension and it matches what was budgeted.
and why didn't we have it last year?
It was requested and not provided.
Then we should make a bigger stink when that stuff's happening. That's our role. We should not let a budget number be 12-14 million dollars short because we didn't have the information. We should have been pounding the table then and saying you can't adopt a budget that's 12-14 million dollars short.
I guess to your point, if we don't have a process in place, what should that process be? Will we request information, critical information, and we don't get it in a timely manner? What's the escalation process? What teeth do we have?
That large of an
But
item,
that
and if it's mathematically verifiable.
If it escalates to the point where we need board involvement, it's brought to the board. Now, realistically, there are so many balls in the air during the financial plan review process that it is, for a small office, it's just you doing the best that you can. And
And historically, what's been budgeted has been
It's
adequate.
it
That's the
wasn't
point.
highlighted as a problem area to begin with. Exactly.
That's a
Exactly.
good
We
thing.
have our risky areas that we really dig into, and that's where we spend the majority of our time is on those risks that we identify.
9.9% is the fee for the collection agency.
Oh,
Okay.
Thank you.
You call it 10%.
Yeah, why not just go with these and that?
Every penny counts.
So
Okay, Bryce,
as I was
go ahead.
saying, there unfavorable variance of 20.1 million for transfers out. Now that's related to the ARPA dollars. So that's a pass-through revenue. We talked about in the intergovernmental, it's favorable by 20.1. Well, it goes right out through the transfers out. So that's why year-end projection of 55.8 million unfavorable.
Is the city gonna be in compliance with the ARPA spending requirement?
We have that there on the agenda.
Oh, I'm sorry, I'm sorry.
So just those details behind the 25.5 million unfavorable and general charges, 27.6 million is in French benefits and personal services. That 13.4 million, which we just discussed, was in regards to police and fire fireman system contributions. There's the 10.4 million favorable variance for active employee health insurance, unfavorable 5.9 for the retiree health insurance, and then favorable 2.1 million all other general charges. There is also a 2.2 million favorable variance in utilities, and then we touched upon the variance of the ARPA dollars.
Bryce,
Yes.
when you go back to the departmental, you show a lot of the departments having a surplus because of vacancies. How do we project the balance of the year? So for the fourth quarter, is the expenditure based on the number of jobs that were filled at the end of March? Or do we assume that some will get filled during the last quarter?
It's really blended. It's really looking at what's been filled at that time. Unfortunately, in municipal government, the timing to hire and fill positions, an individual could apply for a position in March, not even get hired until July.
Right, but what do we use for projection? If we're spending with a certain number of jobs filled at March 30th, do we assume the same number?
I look at it as of March 31st, those vacancies will not be filled unless I know there's an incoming police or fire class or something. For example, the current administration, they targeted bringing in additional traffic or parking enforcement or certain selected areas. So
Commissioner, are we filling jobs now?
We're trying. It's, pretty slow going in many cases. The HR process needs a complete and utter overhaul. It is incredibly cumbersome. We figured out Commissioner Brown has had some clever ideas for how to expedite a few things, but yeah, it's still a real pain in the ass. And then the two biggest areas, vacancies, right? 10% plus vacancy rate in fire and police. Those require enormous recruiting, tasks, right? It's a long process, right? And then also we're just not salary competitive, especially every day I hear about somebody who gets stolen by Buffalo Sewer Authority, BMHA, Buffalo Schools, Erie County, right? Especially folks that have CDLs. So, you know.
So the one thing that will help with this, how long it takes to bring in individuals, the New York State, under civil service, we created a program called New York Helps. And so right now it temporarily eliminates the need for individuals to have to take a civil service examination. If they meet the minimum qualifications, they can apply for the job. So this program has just been extended out through June of 2028. The city of Buffalo previously had not participated in it. And now we're having those conversations to get them up to speed to be able to do that type of stuff. So we're really reducing the time that it takes for someone.
Especially at those entry level positions that have high
County
turnover.
has, county has.
Yeah, all of our social welfare examiners, child protective service work, like. I think also on the vacancy point too, because we're always thinking of something similar with the county as well. I would say generally speaking, outside of those mass onset of hirings, which would be based on a fire or a police, the trickle of filling positions is almost matched by the trickle of people leaving service. So it's almost like a push.
It's based on current.
Yeah, it's mostly a push. So I wouldn't, I would think generally, unless you expect an academy to go through in police and fire, the vacancies that you have everywhere else at a period of time, I think it's a reasonable assumption to assume those will continue, or at least the same number. Even if that one gets filled, you have another one as vacant.
And the last we looked at $16.5 million of attrition savings was covered about 300 jobs, and we had about 400 vacancies. So it looks like you could fill 100 jobs without exceeding the budget appropriation.
And those dollars, to my understanding, were for the most part the positions that were planned to remain vacant the entire year, whether someone had an encumbrance on that position or whatnot, not the turnover per se.
Yeah, it's the weirdness of, and the budget we inherited, they have like a position by position control, as opposed to just the overall vacancy control number in a given department, which is like strange, and but led to vast confusion with our common council discussions.
Yeah, because some of them you could point directly, you could see which job you plan to have vacant the full year. And then some places in the personnel runs, who knows?
Well, and then by contract, some of those have to be held back because of the person comes back to their position too. So it's a little bit harder to figure out than I think people think with all of that. But yeah, good. Any more? Bryce?
Just a couple more slides. So going to FTEs as of 3/31, there were 409 vacancies, or 14.8%. Police and fire at the time both had a 10.5% vacancy rate. You see 85 in police, 78 in fire. That is going to continue to increase as we get to the end of June, going into the next year. And then these are the potentially overestimated revenues that I calculated. We did discuss the tribal state casino revenue. Yes, there was a letter that said city will receive this money. We're at June 17th. Hasn't been received yet. So I'm still keeping that there as a risk. Service charges range between 1 to 1.8 million, interest 400,000 to 700,000, and then fines $500,000 to 600,000 beyond what was included in the third quarter report.
Just quickly on the, the casino revenue side,
Yes.
have you heard anything about the actual negotiations of the
No.
compact? Because what we're talking about here is an advancement of expected revenues based on a compact.
Right.
Not the actual negotiation of the compact. I know from the county side, I haven't heard anything since the last dust up, batch of articles where they were all just consulted at it.
Right.
But I haven't heard anything new in months.
There's a city? No?
No, all we actually heard is from the gaming commission, our lobbyist got word from the gaming commission that yes, you will receive your payment in this fiscal year. And actually, I was just texting our lobbyist in this meeting and he says he's working on getting the actual payment. And
Again, that's an advancement of
Right.
a future payment. That isn't actually
nothing
negotiation.
outside of.
Because eventually advancing on negotiations that never progress, it's gonna happen.
So in other words, you're not anticipating a payment by June 30.
They are in.
They are?
They are.
Yeah, there was a
That's why
I know you still are, but I'm,
Well, we do get, if we receive it within 60 days of year end, we can
yeah,
look at that.
right, right. You can accrue that.
Right, and that'll be the key on, almost certainly is gonna have to be the case with the 30 million we have
Yeah.
budgeted and enhanced state aid is probably gonna come after June 30th, but will come before the 60.
I mean, possibly for the parking issues as well, right?
No, parking, I'm actually gonna hit it, I think, yeah.
That's
It'll kill me, but yeah.
Okay, Bryce, go.
Administration is projects a year-end favorable $1 million. Keep in mind, that includes the use of restricted fund balance of 2.6 million for capital outlay. Excluding the use of restricted fund balance has an actual projected deficit of 1.6 million. BFSA is projecting an unfavorable year-end deficit between 3.5 to 4.7 million based on the fines, service charges that I had mentioned. Now that reflects the full receipt of the 10.5 million for the tribal state compact, as well as the sale of the parking ramps at 26.5 million and the receipt of 30 million from New York State in the municipal financial assistance. 66. So that's roughly $67 million that need to materialize within the as you were just discussing, within 60 days post June 30th. Which leaves a potential unfavorable revenue variance of a deficit of 3.5 to 4.7 million.
So Bryce, if I'm clear, then we don't have enough in even restricted reserves to cover the worst case scenario.
That is correct. That is correct, because I believe the city comptroller came out saying that the utilization of the rainy day fund would not occur this year. No, that's not, okay, I misread that.
I mean, right now, as far as how we ended this year, 25 is like 104 there. What we discussed in council was a similar to. Speak up. What we'll discuss in council is that if we do end with a deficit this year, our deficit, I think, was around 2.9 million. BFSA saying like 3 or 4. Administration said a positive 1. So all 3 entities are within reach of each other in regards to the year-end projection deficit. But if we do end with a deficit of this year, we'll have to know to 9 times 10, depending on how the non-spendable, how the recycling fund go. 9 times 10, that's going to be even higher because we'll have enough revenue. But at the end of the day, we probably won't be able to fully fund our restricted fund balance. We won't be able to fully fund our rainy day fund balance, nor will we have enough to put into our available fund balance, which is a combination of the assigned and unassigned.
So then what's the comptroller's recommendation?
Well, our administration did speak to the finance committee that they will draft a plan to replenish the fund balance. But 9 times out of 10, that plan won't go into effect until fiscal year 2028.
But if we run out of all fund balance, restricted and unrestricted, what's the comptroller's plan?
We don't care our plan, the finance administration have to draft it. We will review the council plan, so we will per the fund balance.
Lena, can you speak louder? I'm sorry. I can't really hear a lot of it.
So is
Soft
there,
spoken individual.
So right now, as far as when we look at the numbers at the end of the fiscal year, the city will not be able to fully fund its restricted fund balance. The city will not be able to fully fund its emergency stabilization fund, which is a rainy day fund, nor will the city be able to fully fund its unassigned available fund balance. So we're unable to be in compliance with fund balance policy. Administration will have to draft a plan to be able to replenish that fund balance policy. We know they won't be able to have that plan in effect 9 times out of 10 fiscal year 27. Administration did say they'll create a plan, and 9 times out of 10, the replenishment will occur in fiscal year 28. Yeah, because right now, if you operate in the negative this year, you won't be able to fully fund your fund balance policy at the end of fiscal year 26.
Now, do you have a choice to not fund restricted fund balance? Or,
No,
I mean, I would think if there's a long-term receivable, there's not really a choice that you would have to counter it with a deficit unassigned fund balance.
But restricted is really like the capital outlay account.
Oh,
You're supposed to have 15 days of prior year expenditures sitting in that account. Whereas rainy days was at 30 days of prior year expenditures. And then also the available fund balance was at 30 days of prior year expenditures. So we were not in compliance with our policy at the end of fiscal year 25. 9 times out of 10, we won't be in compliance with our policy at the end of fiscal year 26, and then the administration will work on fiscal year 27. The current administration. Which will affect, we know, our bond rating.
I was gonna say that.
Because we're not in compliance with our own policy. But the administration will draft the plan, we'll review it, the council will review it. See where that takes us.
so instead of saying a plan, what would the recommendation of the comptroller be? I'll change my wording, getting better.
We don't want to try to do somebody else's job and get sued, so we'll wait to allow the administration to draft the plan. And then we'll
You took that softball, Brad.
Yeah, he did. I'm gonna get better at this. That's all I can say. Right.
Yeah. So we're just timing over the 2 years.
It's another reason to not appropriate that 25 million yet.
Okay.
Yeah.
Can I just offer like a issue?
Sure, go ahead.
Because we'll work through the weeds of June 30th and then next year. What we've communicated clearly, and you'll see again maybe today, is our cash flow, which was 400 million and funded the city 9 months out of 12 in the last couple of years, is going to diminish because we got our own deficit problems. I'm looking at right now, October, November, December, just board funds getting down to $100 million or less. Now we'll bounce back up when we get the majority of our revenues to about 300 million by the end of the year. But it's not this 12-month shot of 400 million anymore. It's not.
And as Jim stated, the city we have benefited from that. We have used the board funds 9 months out of this current fiscal year, peaking around 60, 70, 80 million.
For cash flow needs.
Correct.
Yes.
Yes.
And we have, the controller has noted that we can't continue to rely on the use of the board funds. They have their own fiscal challenges. So that is to push to try to get additional cash flow where the city is not heavily reliant on the board's funds. And I think as far as the projection for fiscal year 26, 27, it might be the 6 or 7 months that we go into the negative. We are looking to use the board funds. But with this additional 25 million, whenever we do it, it will help us. Yeah.
Well, yeah, go ahead.
Okay, nobody hears, or we're not incorporating what might happen. What that means is that Greg Zizmansky calls me up one day and says, Jim, there's not enough money in your account for payroll. Jim, you gotta hold those vendor checks. Well, we're not there, but it's not, you can see it coming.
So
next year,
could
you're
potentially a
not sure.
grant for the year be something that should be considered?
I don't think for the 26, 27 fiscal year, but the year after, we're gonna get there, because we're actually, we keep doing an okay job here. With your challenges, we're actually like going like different ways, right? The city's pulling itself up, we're getting more cash in, we're stabilized somewhat, we're getting more aid, things like that. We're raising taxes, but then, collecting prior year money, but then the school board, yeah, you guys are on this downward track here, right? The thing is, you guys have so much cash, our acceleration is not gonna be high enough, I don't think, to meet what you're worried about with your burn down based on whatever your board effectuates, right?
Well, I don't understand why you would.
No, not quite.
Okay.
Well, I'm sorry, Jim, I don't mean to interrupt. I don't understand why you would get a call from Greg Smansky saying that you don't have enough cash available.
No, I would know that. I guess I'm just trying to,
I mean, that's cash flow.
Yeah.
We were talking earlier about, the potential to issue revenue anticipation notes, but not for this current fiscal year because we seem to be.
Okay, for now.
no, and this is where, this open conversation is great. I know what every penny of district cash is.
Yeah.
We have more than enough to cover our needs next year. It's that the city has been relying on those 9 months out of 12, and I can no longer assure that 12 months of the year, the district has enough money for its own purposes and those of the city.
So if he pause right there,
That's what I'm trying to say.
now if he pause right there, you say, hey, we're good with cash. We're good with cash because of.
We're getting, so we're good cash students, mainly because of him, and we're getting better
So
cash for
we're-
ourselves,
so we're
right?
good. No, I'm saying in this period, we're good with cash because we're utilizing school stuff.
Well, that's been the case for years and years and years.
So, right, so we're not really good,
We're not, yeah.
but we're good. Right? I mean,
Right. Well, the school district's part of the city, so therefore,
Yeah.
in this stays.
In terms of this dynamic, does the school district offer or does the city just take?
The city just
It's a
takes.
joint account. I'm my own curiosity, but
Well, it's a city account.
It's a city account.
Yeah, I mean,
Do we have, we file a cash flow month. Within that cash flow report, you'll see a total balance between the city and board of education. And then we break it out, the city share, and then you also have the board education share. So they submit a report to our cash debt manager. We take their numbers, put on a report, file with council. We talk about it every month. To go back to what the deputy mayor is saying, is that yes, going to fiscal 26 will be okay. We have let's say a deficit of $3 million. 27, you got the additional 35 million from the tax increase. You have the additional 25 million in AIM. So 27 should be okay. It's really going into 28. Where do the city fit in regard to cash flow? We have to do a RAN during the year now. So it's really trying to look at fiscal year 28 going forward. We had these one-offs in 27 that will help, and then we'll see how the new group.
But does the relationship work both ways?
Yes, because the city do provide. I'm not going to speak on this. Administration can speak to that.
Does it, I mean, so.
Yes, there's other services we provide the Board of Ed,
Sure.
for example, they're in the city hall.
So no, I'm saying if they're cash,
Oh, that.
yeah.
there was a time period.
That's-
When
When the city paid for the school
I'm just,
district.
yeah, I'm just
There was a time period way back where the school district was living off of our money
Okay.
because they didn't get their state aid.
All right.
Just go ahead.
We're entering into a new phase that we
Yes.
haven't seen in 5 or 6 years, so it's not on the top of our consciousness or our to-do list. I'm just raising, it's changing, and you're gonna start seeing some of the changes during 3 or 4 months.
Yeah,
this year.
last meeting you said, your baseline, you want to always have what? Like 200 million reserves,
Yeah.
right? Yeah. So as you guys get closer to that number, right, that's what we have to do.
And that's what's happening with the school district, is they're spending down with their deficits, and once you start spending $1 million a year, it becomes like real money after a while. And
Unfortunately, they're doing what the
the city did before, and so, this all needs to be put together in a jigsaw puzzle, and I think it lands in our lap.
I think so we can work together. There's no
Yeah.
finger pointing, so we can
Well,
work.
there is.
No,
Oh,
no, this is,
well, I feel exceptional collaboration, frankly, across the whole government.
Yeah.
I'm gonna be cheesy, but
Plan for 28.
no, I think everyone's working well together.
well, but it may be even earlier than that. I think that's the point. I think the point is with the spend downs, they're going, yes, we can sit there, and our best case scenario is 28. 27 is possible. And how do we make sure that there's enough money and that there's any money at all in any of the reserve accounts for the city? Because worst case scenario, there's nothing left. I mean, we're negative. I mean, I don't know how that.
I mean, I think the mindset, a lot of people saying that the city has zero fund balance, that's not.
No, I understand I'm just saying, worst case scenario over the next 2 years, even with the rest of the, what is it, 87 million, something like that,
98 million.
98 million, that we could go through that.
It
I
could
think-
very well make sense for the controller's office to establish a line of credit in the event a cash emergency comes up and you don't have the time to enter into a RAM transaction.
It's
It might
been-
be something to consider, having something established with your bankers, financial institutions that you do work with now.
I mean, it's been over 20 years since the city's issued a grant.
Right.
So that's unheard of in local municipal government, because usually, you know, you have that
Yeah.
local spring borrowing based on when property taxes are received or state aid.
And the state pension payment,
Yes.
right, if you want to look at that, yeah.
Well, and school districts are separate from municipalities and other places.
Except for us. Yes.
Yeah, so there's that too. But would you then, Executive Director Rowe, then ask us to put together a motion to recommend that? Or should we do that in our next, maybe we should do that in our next meeting?
When we review the
When
financial
we
plan.
review the financial, maybe that would be recommendations. But I think as directors, we need to discuss that maybe a little bit more.
Okay.
But if
That
we
sounds
could
great.
do something like that, I think that's not a bad idea to be doing. Bryce, do you have any more?
Just real quick to summarize this, there is no unassigned or assigned fund balance as June 30th, 2025. The rainy day fund balance is 42.3 million, so it's that efficiency of 6.9 million, which the administration is looking at backfilling by 2028. The 25-26 budget was modified on May 26th to account for the additional 38 million expenditures with a corresponding 38 million in revenue. And then we still recommend a thorough review of the 13.6 million in general fund encumbrances. Should be conducted to determine the reasonability for the current year versus what are just contracts open to eventually be utilized.
Let's discuss that last piece,
Okay,
because
go ahead.
that comes up every meeting, kind of like it is today. As a rush at the end of the meeting, we kind of overlook it, but it's a significant number. What is the status of the $13.6 million in encumbrances, and is any of it needed or going to be spent in 26, 27, or 27, 28?
The Director of Administration and Finance has met with every department about their encumbrances, and we're disencumbering some of them, and the rest for putting what budget line it's been budgeted under, so that there'll be no encumbrances that are really forward that don't have a budget line that they're being accounted for under.
Is that part of 26, 27, or 27,
That's
28?
part of what we're doing right now for the year end in anticipation of the audit.
Okay.
We're trying to clean it up before the end of the month.
Is it too early to tell how much of the 13 will be used or not used?
Yeah, it's probably too early because there's a lot of end of the year. There's a big one for utilities going through for about 5 million, so by the next meeting, I can talk about
Thank you.
Any other questions or comments? If now, we'll move on to review the proposed parking authority revenue bond. This review fulfills our statutory role to review the terms and to comment on the prudence of the proposed bond sale. A report of this review is provided by PFM. Was emailed to you yesterday, and a hard copy is and given to you today in your folder to look at. Whitney Warren, Director of PFM, is present today to briefly review the findings and address any questions. Whitney?
Thank you. Can you hear me?
Yep.
Yes.
Okay, and apologies, some technology issues. My camera's not working, but I can speak briefly to the memo. I think it's hopefully fairly self-explanatory. We reviewed the information that we received from the authority, from Ramirez, the proposed underwriter of the transaction, and from Masterson, the FA handling the deal. Nothing I would say that we reviewed seemed unreasonable. We reviewed the excuse me, the structure of the deal, the proposed way that the bonds will be sold, so on a negotiated basis. We reviewed I would say, indicative interest rates. So, of course, we don't know what the interest rates will be prior to the pricing of the deal, the takedown, and then as well the cost benefit analysis provided by Ramirez, comparing the insurance to the uninsured structure, and nothing that we saw gave us reason to believe that that this isn't a reasonable way to move forward with the sale. But happy to answer any questions specific to the report that we provided.
Ben, do you have, or Jessica, do you have anything you want to add or ask?
No, we appreciate the comments. This has been an enormous effort to conclude this sale. We were very, from, I guess I'll wear my city hat right now, pleased with what were the final appraisal number and what we're projecting for premium. As the POS was finalized last night to initiate marketing. We actually got, I guess, a slightly lower interest rate, so a little lower payment there, which is nice. So we think we're gonna get this thing wrapped up by the 29th, and just want to thank the team that came together for this. I'm very happy with everybody we hired, so it's working out well.
Any questions or discussion? Then let's move on to the next two agenda items, and they're to review the Buffalo City School District's adopted budget and the third quarter report. The BFSA staff reports on these items are under tab 4. And this one, oh, I'm sorry, skip the ARPA thing, which was the only thing we really cared about, right? Jessica, could you give us an update on the ARPA program?
The end of May, we had spent 17 million, leaving a little under 14 million, or 4.15% that was unspent. So, I work with project manager. We're going to try to advance some of these contracts so they get 100% advancement, as opposed to some that receive 25%. So that would involve a contract amendment. So that's our next step that we're working on. And we've given all the subrecipients a deadline of spending their funds by September 30th, 2026.
Do we have people working with them? I'm just wondering, our real concern that we've talked about now for a couple of years is that the folks who got the grants from the city didn't have the expertise that they needed to be able to comply with all of the ARPA things. So at one point we had suggested that there needed to be help for these folks to be able to apply and be able to spend the money. Can you update us on how you did that?
So we have project managers assigned to each subrecipient. And what we've done over the past few months is moved a lot of the administration back to my department. It seemed to be kind of dispersed throughout the city. So I have somebody working on this in the urban affairs department, really helping all the project managers understand what to do. She's becoming a centralized point person.
Right. And furthermore, the commissioner and our council liaison had office hours the past 2 days, giving council members time to look through potential projects in the districts to allocate funds towards ones that could actually get spent out. Start to go over there. And I just cannot give the commissioner enough credit for being super on top of this to make sure it gets executed. So
yes. We appreciate it. I mean, we really do. I mean, this has been a major concern of ours. We do not want, even the 11 billion, we don't want to get back any of that if we can help it. So we appreciate jumping in and pushing this. Are there any other questions for Jessica? Well, thank you, Jessica. So now we can go to the school district. Nathan, do you want to give us a presentation, please?
Absolutely. Thank you very much. Good afternoon, everybody. The following is BFSA staff's review of the Buffalo City School District's 2026-27 adopted budget. I'll start with an introduction. The Buffalo Board of Education adopted this budget on May 20th, 2026. The four-year financial plan draft has not yet been submitted. We point out that the statutory deadline was April 15th, 2026. Our main findings: the district's current operations are structurally imbalanced. The adopted budget depicts a pretty substantial $66.2 million deficit. A 2026-27 deficit would result in 3 consecutive years of deficits. Fund balance totaled a historical high of $424.1 million at fiscal year end 2024, but is projected to decline pretty significantly down to $260.2 by the end of fiscal year 2027. And to break this down, it's close to $164 million decline, or just under 40%. Of that 260, 32 million would be restricted, non-spendable fund balance, i.e. unavailable for general operations. Another 48.5 of unassigned fund balance would be required to be maintained per the Board of Education's fund balance retrograde policy. Additionally, most labor agreements are either expired or will be expired by the end of the current fiscal year, barring new settlements. Internally, we did a contract settlement estimate. If the net cost of all contracts went up 2% or 3% and included retroactivity for the prior year, or current year as is, a 2% increase would be $10.6 million for those 2 years. A 3% net increase would be 15.9.
Do you still think that those are reasonable assumptions, given one that the state just settled with its unions at 4.5% for this year, and that inflation still seems to be going up?
I guess it depends on the negotiators, but Jim has some context for us on that.
Jim?
Yeah, it's 65% of our cost. So if we're not going to, it's the most essential asset we have, and it's our highest cost. And what is going to factor into negotiations with the BTF and the BFSA is the closure of 4 to 6 schools and the reduction in those FTEs. So, Greg, it adds another layer of complexities for both the unions to consider and the district when trying to determine a percentage. And they are amongst the highest paid right now in Western New York, which is great for them and great for us as a starting point in this different, much different environment.
Tim, can I just ask maybe as a general question? You know, 3 consecutive years of significant budget deficits.
Correct.
Based on what? What are the specifics of why you're incurring these kinds of, you had a $424 million fund balance 2 years ago.
Yep.
Now you're gonna be down to 260, but, and then you're projecting another 60-something million. What is it? What's causing?
I can tell you that.
Okay.
Yeah, the last BTF contract was a major cost escalator. The increase in charter school tuition has skyrocketed in an unfair environment. And then thirdly, we increased staff while the enrollments kept decreasing. And that was exacerbated by the sense of euphoria when you got the ARPESER funding.
Yeah, but when you say increased staff, are you talking about teachers?
Yes.
Administrators?
Teachers, administrators, yes. Yes, about 150 of them. And those were funded by our investor. It was, God, we were explicit, don't do this. This is not what the funds are supposed to be used for. And if they are, they have to be cut when the funding ends. We did not do that. And thus, this is where we are.
And how did you build the surplus to 424 million?
Oh,
Excessive state aid or more?
we run a fairly tight ship. We're conservative in our budgeting. We're very good at revenue reimbursements. Yeah.
Now, the charter schools, do you have any receivables from charter schools for students?
No.
That they bill you for, but they don't teach?
No, that's, that was an item that was hyped up by one of our board members, but I presented to her that's not even how the process works. It would almost be impossible for them to.
But I just remember at one time,
Yes.
the charter schools owed the Board of Education money because you were being charged for students that weren't enrolled. And I didn't know if that is a continuation of how they.
Oh, no, but I understand too, but no. The state changed with when the state went from full funding of foundation aid to go back to the formula and not withhold 50% and all this other stuff. They then changed the formula that charter schools charged us. That increased. And then secondly, they arbitrarily changed the special ed formula for how we reimburse the special ed kids that attend charter. That increased $20 million a year. And then I gotta put this out because they're starting it again. Charter schools are allowed to file intercepts without any basis in fact, formula, or even running things by us. And if the charter school office in Albany says, oh, you're right, charter school, the board should have paid you an extra $5 million. They deduct that from our next state aid payment. They're starting to do it now with our IDEA, our largest special ed grant. This one, in my view, is like criminal, but.
Can I just make an observation or two, by the
Yes.
way?
And I'm sorry.
No. So right now, the school district has to shut down 4 to 6 public schools.
Correct.
Now, that same policy doesn't apply then to forcing charter schools they have to shut down?
No.
So is
So in other words, if public school kids are gonna get punished, and the charter kids are publicly subsidized private schools, is what they are. And
so is BPS
so
shutting
there's
down
no
the right size?
Yes.
BPS is shutting down the right side.
But right side.
the right sizing
for
doesn't
adjusting.
apply to charter schools.
No, it never will.
No.
And I'm sorry, so it's increasing labor costs, it's increasing charter tuitions, and it's increased in staff levels, not reducing our ESSER staff level increases after the grant coming in. Those are the three.
Who determines what charter schools can charge the school district? The state. The state.
This is what you need to do at the state.
Now, is there any lobbying on behalf of the school district to get involved with these sort of decisions are being made at the state level?
And there's 2 ways charter schools are chartered. So one is through SED, state education, which has been fairly stringent, I would say. And then part of the legislation is to allow SUNY to do charter schools as well. And that's where I would say the issue is, particularly for a place like Buffalo. They've been very lenient in allowing a lot of charter schools that in some cases have failed, and we've seen them across the state and others, which have caused a lot of problems. So the charter school law itself, it seems to me, is an issue that's causing some of the problems here.
Now, I'm assuming that the Board of Education has a lobbyist.
We utilize the big five, that, umbrella group for large urban school districts.
Because I would think that at some point, when you're incurring these kinds of budget deficits, based on the fact that charter schools are obviously overcharged, I'll say overcharging for lack of a better word, but to say, we gotta amend some of this legislation, or someone's gotta start looking out on your behalf of the taxpayers who support the Buffalo Public Schools. And it's, to me, it's very punitive that somehow public schools are getting hurt by this. You know,
I
at the
agree.
expense of charter schools.
I agree.
One question I had is, what is the timeline for the decision and then the subsequent sort of announcement of what schools are going to be slated for closure? And, you know, I kind of take this as, I know this is not a you decision, all of that stuff. But you impressed upon me last time around how vital these decisions were, and that these were coming down the pipeline, and you made every effort to make warnings to some degree, or let people know that this was happening and that it needed to happen. And then as soon as the schools were announced for closure, it immediately got turned around, and then we're starting this process over. So I'm just curious, like, I know there was a change of superintendent, there was a turnover, and maybe the timing wasn't right regarding that.
And frankly, there was board interference in the process that poisoned.
So I guess the question is, like, in terms of the timing, like, when is that brouhaha gonna take place?
Thank you for asking. We've been meeting, every Monday, every other Monday. We've probably got 7 meetings under our belt. But there's internal staff who know the district, the children, the needs. We expect to have the proposed list along with, our cost savings projections to incorporate into the 4 like presented here by September at the latest, and then it will go right to our board.
And so if I can, I think when the superintendent was here, you guys said you shifted from using outside type of vendor to do the work, we're gonna do the work internally.
Yes, and it's been going well.
And so I guess the last piece of that, as you're doing it, is there any community involvement or updates to the community, or they get it when it's done?
They get it in September.
And do we believe that, to the point that was
Yeah.
just made, that
We won't be watching a rerun.
that we get it out
Yeah.
there? Like, no.
We're gonna do our best to learn the lessons of the past.
Okay,
Uh,
I'm good.
And again, I guess from, talking to the superintendent too, you're closing 6 buildings, which are 6 communities, which you have to have a reuse plan, which is gonna cost funding that I would hope would be in the budget to be able to make this more palatable to people, whether that's turning these into community centers or working with the city and the county to come up with important uses for this, particularly as we think about the community schools program, which was supposed to have a wraparound set of services that would be provided that now you're going to pull out of the community. That's a problem. And I can understand why people would be upset, not just in losing their school, but it's everything else that is around that. And it's going to impact not just the school district, but the city and the county as well, as they decide how to provide services and things. And are you meeting with the county and city to discuss any of that?
No, not at this point, no. We don't have but I think it's really important that we've done a ton of work on all the factors we're considering, but mainly it's a cost-driven decision. We run out of money, we can't make payroll, we don't do this, and it's the truth. But we're considering all these other things, Fred, so we're getting close to where we have the 6 locations very specifically identified, along with where those children will be going. So that's the crux of the analysis up to this point. then we will very quickly be reaching out to the city and the county, but if I were the city and county, I'd want to know that for information reasons. But as far as who's going to put money into new programs at old schools, I mean, that's just has never been discussed in a program like this. One thing I do want to stress, closing schools does not mean a diminution of services at all.
Yeah,
It doesn't.
No, we get that,
Okay.
but there is an impact.
I agree.
So if you have a school in the middle of a block in the community.
Yes.
And so to avoid what Mark was talking about, we have to have something.
Oh, and we will.
So we would be excited if you said, yes, that's part of our strategic plan and thinking.
And that's what I should have said, because it is.
Look, I don't fault members of the community for when they find out of a decision that they believe will negatively impact them from having a reaction.
Mhm.
I think that was a completely predictable reaction, and everyone somewhat acted as though they were shocked that that's how that reaction was gonna occur, wherever it was going to be. And it seemed to waste a lot of time and effort and now being redone. And maybe that is the crux of it, is having, better communication within the community of what the future may look like to maybe mitigate some of that criticism, which the Board of Education may be more apt to withstand.
So I was also shocked by the deficits of the last. Didn't realize that we thought we did the fund balance that much. So you mentioned that there's a period of time where you kept increasing staffing rate despite decreasing enrollment.
Good.
Where is that?
There were 150 FTEs over where we were pre-COVID.
But your enrollments have been steady and increasing though, right?
No, just in the last 2 years, we've been up 50, 60. Overall, we're down by 3,000 to 4,000 kids over the past 12 years.
So is that part of the review and the 4-year plan, or is?
Oh, without doubt, yeah.
That's the school.
Yeah. And, every 4-year plan that we've submitted for 5, 6 years, and this it's not gonna come off as like a pin on my head, is the decrease in enrollment and the need to engage in a right sizing program. So yeah, we've been saying it, but we obviously haven't taken action yet. But I really think the school closing program is going very well right now.
I just have I have one more question, and not to continue to be known this. Is the Buffalo Public Schools District responsible for capital improvements on these charter schools? In other words, do we issue, does the Board of Education issue debt to support the problems with their facilities?
No, great question, and that's no.
Okay.
No.
But transportation is a big issue.
All right.
Oh,
but we're not paying for their water leaks or their
no, we're not.
roof repairs or
No.
structural damage or whatever.
No.
Okay.
Can I just throw this out to sort of prepare everybody? I couldn't agree more about the community involvement, and it is a part of this planning process. Another thing, the estimates we're getting back from our transportation department of the impact on busing of closing 4 to 6 schools, it's staggering. All the disappointments we have with kids being on the buses for 10 hours and late, 80% eliminated immediately. So it's more than just saving cost in transportation, it's the effectiveness of the delivery. They start showing up on time, like up to 80%, where they might be 60% late right now.
When you're reimbursing these charter schools, and you're getting invoiced.
Yes.
Is there a way that they could bury the costs of whatever capital improvements they make on their property?
No.
I said,
That's a great question. No.
Who actually audits the invoice that would determine that, okay, you're only paying for their teachers or whatever, and not improvements on their property.
Correct. Great question. Yes, we audit every invoice, every student, check the addresses to make sure that they're, we do a very good job of that.
Okay, so there's no way they could vary expenses.
No,
They're getting a per cap. So as part of this total amount that they get, they've estimated in repairs and all of that,
All right,
as
so-
they calculated the cost,
That's what I
and
didn't
they've
know.
negotiated
No, I
with the
didn't know,
state.
I don't
you
know
know.
if there's a breakdown of an invoice there, okay, well.
it's just a student thing.
It's
We
just
don't
student,
want
and they,
student
can- so in other words, they can vary
Oh, yeah, they're,
expenses into that.
well, it's part of their cost structure.
Yeah.
But then they can't use that same money for other operating.
Right, it's, but that's how they calculate it and then go to the state and negotiate.
Okay, but they don't go to the school district and say,
It
well,
is
you know.
No, it's a
we
statewide.
need you to issue bonds on our behalf.
It's a state. I just want to remind everybody that we have until 3:30, so that we do need to push a little bit.
After two.
Yeah, the way we're going,
We got a lot of.
we're about 10% through the thing, so if anybody says we're not doing our job, I think we'll make them watch this
Well, that's easy.
one. Go ahead. Go ahead.
Thank you.
Okay.
Just a friendly reminder, my arm is really strong.
I'm gonna continue with the main findings, but I just had a couple data points. A lot of what was just discussed is in this presentation in further detail, but Jim, when you mentioned the ARPS or the continuation of individuals, programs and services, back then we calculated that to be about a $50 million annual run rate. So that was the source of the drawdown. Great, personnel, services, programs, but dollar amount was that amount. As far as school capacity, when JCB was done, it was built up to be as high as 61,000 pupils. There's less than 30,000 pupils right now. So give or take about 50% capacity within all of the schools. And then finally, we talked about the closing the schools. That curtails districts' rate of increase in annual operating expenses. That is a charter school impact as well, because the charter school tuition rate is based on a 3-year rolling average of the district's annual operating expenses. I just wanted to put that out there for everyone. It's a very complex. Yeah. If you ever have 2 days to go through this formula, you can do it. All right, so continuing with our main findings. The adopted budget includes several deficit reduction actions that reduced it from being a much higher deficit. So it was $66 million. It could have been higher. The first of these was the total number of budgeted FTEs was reduced by about 70 as compared to the prior fiscal year adopted budget. This included 43.5 central office positions funded through the general fund. Additionally, 35 general education classrooms will be consolidated next year. The district believes that the average class size goes from 19 to 21 in those classrooms. And then the impact on the reduction in FTEs, Chuck and I went back and forth. We came up with the same number. It's estimated about just under $10 million, 9.8 million conservatively. The second area was that the superintendent announced that the virtual pathways program would be eliminated, and it's a minimal annual savings of $1.2 million. So in net reduction of spending 11 million from those actions alone. Those would be annual increases.
Virtual pathways, why we can cut costs and not diminish services overall. Virtual pathways, it was a great program. It had 32, at the end, it had 32 kids and 27 teachers.
So those are the areas where the deficit was reduced. There is new spending, $8 million in special education programs. There's 21 new SPED classes, 58 additional staff for those classes, and a new agency program housed in PS 27. We mentioned that I have here district plans to close 4 schools in 27, 28. You were mentioning it could be as high as 6. Those have a minimum cost avoidance of $6 million annually. Going in a little bit deeper to the key findings, the adopted budget includes a year-over-year estimated revenue increase of 38.1 million or 3.4%. This is a rate of increase higher than the rate of increase in appropriations. That's 25.5 million or 2.1%. So the deficit narrows because revenues are increasing at a rate greater than expenditures, but it still exists.
Does that include the IDEA and Title I cuts that are already closed?
These are general fund, and those are recorded within the special projects fund, so they do not include them, no. A deficit of 66.2 million in a fund balance appropriation of that amount, eliminate the deficit. District has reserves available to do that in 26-27. It's about 5.5% of all expenditures. Okay, so back when this board reviewed the 2026-2029 financial plan, staff identified potential risks to the plan. This included a cumulative 49.2 million in 26 and 2027 expenditures. We estimate that about 30.8 million of these risks have materialized as follows. The first is the charter school tuition. Back in last August, we said that it looked potentially underestimated by 15 million in 25-26 and an additional 5.4 in 26-27. The current fiscal year forecast is unfavorable by almost that amount, 13 million. And the adopted budget has the same amount that BFSA estimated for charter school tuition payments 1 year ago. Additionally, we looked at retiree health insurance. 2025-26 looked fine. 26-27 appeared under budgeted by about 14.3 million. The adopted budget is much closer to BFSA's year ago estimate at $12.4 million greater than what was included in that financial plan. Okay. Thank you, Claire. Taking a look at the revenues, it's all going to be from state aid. State aid is 87% of total general fund revenues. State aid goes up 47.3 million or 5.4%, offset by some decrease of 14.6 million in New York State aid for building aid. BFSA estimates 26-27 sales tax revenue. We had a lot of discussion about this. We believe it's underestimated by a minimum of 2.2 million in this adopted budget. It could be a little bit higher, especially what Mr. Cornell was mentioning earlier about receipts to date. Yeah. The adopted budget underestimated New York State aid by it's 5 million for foundation aid. It's really about just under 7 million overall. And that wasn't anything that the district did wrong. It's just that the budget was adopted after the state budget was adopted after the district adopted it, and they were using older numbers. So the good news is
just a quick question. Are you guys anticipating any further cuts to federal aid with this current administration over the next several years? I don't know what you're receiving federal funding up there in the Medicaid reimbursement.
Next year, 26-20, there will not be any large cuts to our main federal programs. There's indications that there might be starting in 27, 28. Yeah, but nothing that impacts next year.
And there's timing issues too with the payments now that things are being shuffled around. That cost you headaches.
Yeah, cash flow.
Take a closer look at expenditures. If they're going to look a little bit different because employee compensation, employee benefits either don't go up by much or actually go down budget to budget. And there's reasons for that explain it. Compensation is budgeted at 435.5 million, or only $4.2 million, or 1% increased from the year prior adopted budget. Reason for that: teacher compensation goes down by 1.5 million. This is based on the number of budget positions. There's fewer budget positions. Normally you're used to seeing some increase. There's fewer people. And that does include a step increase for approximately 80% of the teachers that are still eligible for step increases. We looked at all employee compensation for the other groups. The other groups are about a third of total employees. They all seem reasonably estimated within the budget. Some seemed a little bit over, but not significantly so. But overall, reasonably estimated.
Are there any attempts by the teachers, the magnet school teachers, to form a union?
The charter schools, I'm
Yeah,
not,
charter
I
schools.
don't
I'm
know.
not mad. Charter, right?
Yeah, I don't know.
All right, so their salaries are based on whatever they negotiate, which comes out of what we pay per student
Yes,
There are some unionized charter schools.
in Buffalo.
Probably about half. Give or
Really?
take, yeah.
But they're not members of the BTF though, right?
They're not BTF, but they are, the ones that are unionized are part of NICEF, yeah.
Okay. I wasn't aware of that. I didn't think they were unionized.
Some are, yeah, depends what they decide to do. Okay, so you've got the employee count. This compares last year's adopted budget with the 26-27 adopted budget, gives the actual counts as of March 31st. Budget to budget, positions are reduced by 70. That's 77 teachers, 24 white collar, and then a net 31 increase of all other positions. Largely best employees, teacher aides, teaching assistants.
Say it again? The last part?
Yeah, there's an increase of 32 teaching aides and teacher aides and teaching assistants.
Yeah.
That's some minor.
So the 77 increase is just attrition?
we hope and there could be 10, 15 layoffs that result. This is right now what's going on, the budgets that are bumping and
Yep.
requirements, it's impossible to predict. Very end.
How does central staff going back, does that impact?
Yes, there was less of that than we probably only eliminated 15 TOSA positions. That's where that occurs. Every one of them are guaranteed a classroom.
Right, that's what I'm saying.
For sure. Yep.
So is this is all pre-closing the 4 to 6 schools?
Oh, correct.
Right. So we're,
Right, and like a perfect example of, we have a school-based budget process. They'll have a school with, 2 third-grade classrooms with 5 kids in each classroom. This year, we said you're having 1 classroom with 10. No, that's exactly what happens. And that's where the reduction in 77 teaching positions occur.
So what are, I don't know if you have this now, but what are our ratios looking like in a classroom?
Sure.
I know that's an extreme, but.
Now, one of the key measures is pupils per staff member. We have 8 students per BTF member. Average is probably 15 to 1. And now.
That's actual classroom staff.
Correct. So we'll be going through more of that and incorporate a lot more of that in our school closing rationale. But we are.
Taking a look at total employee benefits, we budgeted to add 237 million. 7 million or 2.9% decrease compared to the prior fiscal year adopted budget. Pension payments actually decreased by 5 million or close to 12%. This is based on the TRS, employee contribution rate. It's lower in 26-27 than it was in this year, and there's fewer staff receiving. Payroll tax payments are also decreased by 4.4, which is over 13%. Reason being is that it looked like it was a little bit over budgeted in the 25-26 budget. It is higher than the current fiscal year forecast. And active/retiree health insurance expenditures increased by 4.5 million or 3.8% as compared to the prior fiscal year budget. It's a relatively minor increase considering how large it is. It's really just based on current fiscal year forecast again. Transportation, almost $80 million in the adopted budget. It's a substantial increase. 6.7 million or 9.2%. The increase is based on obviously the anticipated level of transportation services offered by the district through First Student, which has a new contract, and the NFT for the high school students. But district does receive transportation aid at about 87% of the prior school year's total expenses, eligible expenses. And finally, debt service is budgeted at 64.2 million, 14.2 million or 18.1% decrease as compared to the district's prior fiscal year adopted budget. This is just based on the annual principal and interest payments that the district has to pay on its outstanding bonds. We do have a capital project update here, and I'll just read this. The city of Buffalo sold $21 million in bonds on the district's behalf in the 25-26 year to partially fund year one of the capital project program. Approximately 90% of these projects will be completed in the fall of 2026. Depending on the outcome of litigation between Buffalo City Comptroller Barbara Miller-Williams and former acting Buffalo City Mayor Christopher Scanlon and Common Council member Mitch Nowakowski, the district may request an additional $50 million in bonds in September of 2026 to fund the second year of the capital project program. All other expenditures are everything else that we haven't discussed yet. They're budgeted at 193.2 million, which is a 13.6 or 7.6% increase compared to the prior adopted budget. Mostly everything there is flat. The big increase is that there's a line reserved for contingency, which wasn't used much in 25-26. It substantially increased to 11.6 million. I won't even read the percentage increase because it's astronomical. But the point is that that is money that the district specifically set aside in this adopted budget to settle contracts. Okay, and charter school tuition payments are budgeted at 202.9 million or, pardon?
Here you go.
Okay, here you go. Ready?
How about it?
Budgeted at 202.9 million, 22.2 million or 12.3% increase over the prior fiscal year adopted budget. So the first part of that was that the 25-26 adopted budget was under budgeted by about 13 million. Next is that there's an increase in pupils of 126 and also an increase of the base tuition rate of just about 1,400 per pupil or 8.6%. Then this table at the bottom shows total Buffalo resident public school pupils by percentage from 2019 to 2020, all the way up through the adopted budget. You can see that gradually over that time period, percentage of public school students in the charters has increased from about 22% up to about 27%.
Again, to confirm that, in other words, the increase in the budget for charter schools is based upon the authorization from the state of New York.
Right.
To do that.
How do you budget for that? Right, obviously it's an estimate, and that estimate, in this past year seemed to be off by 13 million. I'm curious how you.
The reason for that is the state came out with the rates after we approved our budget. So we hadn't used the most up-to-date rate. Tim Pringle, we have a phenomenal group managing the charter school. It's like a placement department, it's like a billing and an audit department. They do a great job. But it's 10,000 kids there.
Okay, so it wasn't for the estimate in this case, and then going forward, it's a convolution of number of pupils, but then the state's rate per pupil. So you had the right pupils, not the right rate, the new rate.
Correct.
Yeah, pupils were really close. In fact, this slide here shows historically where they've been for both, for the district and for the charter school students. If you look all the way to the left, +1, that's the COVID year. That's the big decline in pupils. It goes from all the way from 32,900 down to 30,850. And then it pretty much flatlines and then the last few years.
Came back.
Starting to increase, yeah. That's after, the COVID years really stretched out what had been happening with declines, that it was leveling off, and then it's starting to rebound. It's stabilized and it's starting to rebound.
I mean, have we identified where those children went? They're doing homeschooling or some
Well, charter enrollments are up. Not too big of an increase in what we call non-pubs, and a little bit in homeschooling.
Very little bit, yeah.
Some of it's at the very, very lower end. There's a birth rate thing. That is really starting to impact schools, and it's going to have a much greater impact over the next 5 years, like a dramatic impact nationally.
I thought COVID increased the,
Well, what about,
No,
people were together.
no.
Oh, yeah.
now,
Economics reduce.
Jim, how receptive are charter schools to diversity of children? Especially those that don't speak English, they come from different, I mean, I'm just curious as to, where are they in way of keeping it? The acceptance of, major diverse students in language, difficult.
I'm not an expert, and the perception is not nearly as much as the Buffalo Public Schools, not nearly, in terms of
That's the point I'm getting at.
services for special education especially, and other factors.
And they have the right to refuse a student, don't they?
No, they can't refuse them, but after certain testing dates, it's amazing how many are asked to come back to BPS.
Yeah.
Okay, certainly. This is gonna move along to the staff conclusions here. The budget is balanced in 26-27. Importantly, the budget is balanced with the use of $66.2 million in fund balance, which of course is a non-recurring source of funding. As appropriations exceed estimated revenues, a structural deficit exists. We'll go through this whole part here, but
Can I just say, I don't think we should be having that as our conclusion that they presented a balanced budget, because they presented a deficit budget of $66 million.
Okay.
So I don't think we should be throwing that term around that they presented a balanced budget.
I think legally, though, it is balanced. It's balanced with using reserve funds. So from a standard accounting definition, I don't think we can say anything else.
Yeah, and then I think there's caution on the.
Yeah, I mean, I get what you're saying. I think we need to emphasize
Yeah.
that they're using fund balance, but I think it's a different discussion.
right.
Yeah, it's not a
We
great
need to change,
practice,
yeah.
but yeah, I mean, when I was doing my research, going back through many prior city budgets, in the early aughts, they were plugging in fund balance right directly in the budget every year for quite a few years. Yeah, so I don't love it. Erie County, we've never done it, but
Minor amounts
a little bit, yeah.
There were some years going back.
Going
back.
$5 million maybe, and whether that actually got used at year end.
Hey, Nathan?
Sure. The next conclusion is that we felt that the general fund revenues were reasonably estimated within the adopted budget. This budget was passed prior to the state passing their budget, so yes, it will be an additional $6.9 million in aid that's not included. There is a threat that to the federal Medicaid reimbursement as the current congressional budget bills seek to limit Medicaid eligibility. These changes could potentially reduce the district's federal Medicaid reimbursement.
Okay.
That's a threat that we're pointing out. But also, we thought that the expenditures were reasonably appropriated within the budget. Rate of increase is 2.1% compared to the prior year adopted budget, and it's lower than the revenue increase, estimated increase. Just to go over, we went through this before. The deficit reduction actions include reducing budgeted staff by 70, consolidating 35 general education classrooms, and eliminating the virtual pathway program. The net of these actions is $11 million. The adopted budget includes $11.6 million reserve contingency, specifically dedicated to settle expired labor contracts. All contracts expire by the end of this year, except for BEST, excuse me. BFSA estimated settling the contracts would increase employee compensation and benefits by a minimum of 10.6 million, with only a 2%, and 15.9 million, with only a 3% increase on a general fund basis alone. This includes retroactive payments for 25-26. The reserve contingency is largely adequate to fund that, depending on what actually gets settled. And one page is dead, so I'm going to steal this here. Thank you. This is a recommendation. District officials must continue implementing actions to reduce district costs and reflect them defining enrollment. It's particularly important given that all collective bargaining units have contracts that will be expired by the end of the year, except for the one that I just mentioned. These actions are outlined in the 2026-29 deficit reduction plan, which included the closure of 4 schools in 27-28. These actions should be planned and detailed in the forthcoming 2027-2030 financial plan. Yeah. That's fine. I know it. That concludes my summary. Thank you very much.
Thank you, Dave.
Are there any other questions on that, or can we move on to the quarterly report? Any questions? I think we've done enough of it. Go ahead, Nathan.
Thanks.
So, do a brief summary of the current fiscal year, third quarter. Yes, the district will conclude current year with a second consecutive deficit. The prior fiscal year deficit was just under 40 million. The district's forecast for current fiscal year end is 60.8 million. BFSA's internal forecast is a little more favorable at 43.5 million, but it's clear that there is a structural imbalance that needs to be addressed to curtail future deficits. District is forecasting both revenue and expenditure favorable budgetary variances. 18 million. And we go a little bit further at 35.3 million. So on an actual deficit. Enrollment was higher at April 21st than at the end of the year 2025. So potentially they could be the second consecutive year with small increases after pretty large drops, particularly during the pandemic. We just discussed that. There was significant capital-related financing activity within the last 9 months. This was discussed by the city. We Buffalo bonded for on behalf of the district in September 2025. To date, the most recent number that we have is that they've received $6 million of these proceeds to pay for the work performed in the projects. Is there a more updated number than that, or is it?
I meant to bring one, and don't have.
Okay, so somewhat north of it.
Yes.
Yes, thank you. District closed on a refinancing refunding of approximately $80 million of old JSCB debt in late November. This gives them about $2.7 million in additional cash for future capital projects. Revenues, district forecast is favorable by 14 million, based solely on New York State aid. BFSA agrees with this and forecasts an additional $4 million in Erie County sales tax receipts. For expenditures, the district's forecast is favorable by 8 million, and BFSA's forecast is 21.3 million. And then it lists out where each of those categories come from. This slide shows the update of all full-time employees by all funds and also by government funds. At the end of the third quarter, there was 215 vacant general fund positions and 255 vacant all funds positions. In conclusion, the current fiscal year will conclude with the second consecutive operating deficit. Yes, the district concluded last year with a $39.6 million deficit.
This would represent a cumulative 2-year fund balance reduction of $100.4 million. And it's annual deficits of this size indicate a trend in the structural imbalance. The district has adequate reserves to fund the current deficit. However, it must take action to address the structural imbalance to avoid a continued drawdown of its fund balance, which is a non-recurring funding source. Such actions will allow the district to avoid cash flow issues and the need to take draconian actions to eliminate future deficits. The dire need for the district to address the structural deficits is even more pronounced as the district has expired or soon to be expired labor agreements. That concludes my brief section.
Jim, let's say you do close the 4 schools. How long will that take you then to see deficit reductions so that you're getting rid of the drawdowns?
Well, great question. Let's say let's use the 60 million as our baseline deficit. We will save $8 million per year in operating expenses per school. 24. So let's say that's 25. 60 minus 20. Now I think. 35.
It's been a long meeting.
Fred, we can figure out between transportation expenditures, unforeseen savings from 5 less facilities. We're spending maybe $250,000 each in emergency. So I'm doing the math in my head.
Right, no problem.
We'd be down to $20 million deficits, conservatively budgeted, like where we could probably beat that number. After the 4 schools are closed, and if it's 6, we'd almost be there.
Right, but it's still going to take you 2 years to close these schools, 2.5 years to close these schools. So we're looking at you having to spend down over the next 2. No?
I think we're gonna close them right away. Now.
But what do you do with them? I mean, you're going to have costs.
Yes.
Even if you don't have students there.
Our initial cost estimates for the closings that I submitted included, I calculate the gross cost. It's like, and then I add back 20% of those to cover things like teachers, maybe a school that got more kids needs an extra 2 teachers, or maybe 10 classrooms got to be renovated. So that's all there.
Okay.
And I think.
Are you referring to empty building
Well,
maintenance?
we've got empty building maintenance. You're going to have to do something with it to sell it. There's all sorts of other costs.
But a lot
You gotta protect against vandalism and,
Yeah.
lawsuits. They'll turn it over to the city. Yeah, if the kid gets hurt on the property.
And I can't wait to recast the numbers and present them to you, because you guys always pound me with good questions that make the analysis better and more usable. So once I get a specific list, I'll be bringing that.
What's the impact of these deficits on cities?
On the districts?
Impact of what?
On the
Those districts.
City's boundary.
cities,
Right.
you know,
I'm thinking
so
of
many
the
years
bond
of
rating.
structural deficits on the city's bond rating.
What, Don?
When it goes to the bond rate, just they do look at.
They do
Yeah.
look at both, yeah.
Well, it can't be positive.
This has been such large deficits.
It has gone, city has only banned 4 district projects, in a number of years. They've been using refunding savings from JSCB for a long time to pay for the capital program. So, and of course, with the ban, they didn't get a bond rating that really focused on the school districts. So I think the real answer is we have to kind of wait and see what the bond rating agencies really see. When I think about reports I've read over the last couple of years, they've really focused on the city. There's very little discussion on the school district.
Ben, was there any discussion when you went to the parking bond on the school district at all?
No.
No.
But that was like a very distinct rate.
No,
Yeah.
yeah, and you had money coming in.
Yeah.
I just wondered if they, that's. Are there any other questions, discussions on, all of this? Oh, seeing
Yeah,
none,
I would.
go ahead.
I'd just like to comment, I guess, on both the city and the school boards. You know, they've gone through a rough time, lots of deficits. They're both taking positive steps to bring their budgets more into a balanced situation. So certainly the tax increase, but, you know, to enhance the revenue base like that was important. To be looking at closing schools. So I'm encouraged by that, in that, you know, no head in the sand here. Everybody's acknowledging there's been problems and they're trying to fix them. Given that, you know, there's still big challenges, probably the most notable being the unsettled contracts.
Yeah.
So I guess my question there is, you know, as they negotiate with these unions and they come back, right now in an advisory role, we can only comment on whatever comes back to them. If we were a hard board, we would have to approve or disapprove those. My question, I guess, is a legal one. In terms of if they came back and we knew that we're only in an advisory role and we really disliked what they were recommending and knew that they could still go ahead and enact these, you know, against our will because we're in an advisory role. Is there a timing requirement on when we could declare ourselves hard and thus require an approval or disapproval?
No, it's, I mean, it's certainly within the discretion of the board if they determine that there's these imbalances. And the board could, and when you say a timing requirement, I'm not sure what you mean. Is there?
So, like, let's say right now we could, you know, if we had the votes, declare ourselves hard, and any contracts that came before us, we'd have to actually approve or disapprove.
Correct.
In an advisory role, we could just comment on them and they go ahead and do what they think is right.
That's correct.
If it was actually negotiated with the unions and then they brought it to us and we looked at it and said, oh, wow, we don't like this. And the only way we can disapprove it would be to then declare ourselves in a control period instead of advisory period, because we think it meets one of the criteria, imminent, you know, deficit or whatever. That's what I'm getting at the timing. Could we do it after they actually submitted something to us that we didn't like?
Yes. I think you answered it already in the question.
I think though there's
Just for clarification, in other words, we're in advisory status, they submit the contract negotiations to us. Then at that particular point, we can vote to go hard and then reject the contract? No. Okay. That's what he's asking.
I think there's an even more fundamental problem is the city and the school district couldn't negotiate a contract, get it approved with givebacks from the union, let's say healthcare or whatever, and then we become hard, and then, you know, 3 months later say we're going to freeze all the benefits from this contract. I would think PERB would have a real problem with basically bargaining in bad faith, and they may throw the whole contract out, make you start again with all of that. I think we have to be very careful, you know, on what our positions are. We can say we don't like this, but to allow them to go through the whole process and then say, well, we're going to keep the givebacks, but we're going to take all the good parts away, I don't think is appropriate for us to do. No, I'm not saying what he's saying. I'm just saying if you follow the whole process out, there's a lot more problems here than just saying, do we go hard or not go hard?
No, but Tom, did I interpret what you were trying to say correctly? That even though we're in advisory capacity, and then we get the contracts as previously negotiated, that at some point we can't go hard and reject it, right?
That was my question.
That's what I'm correct.
And
Can't do that, okay.
Okay, so We would have.
But then you control during the time the contract comes before us to do that.
So we could know what the contract was, go hard before it came before us, and then make a recommendation. But that would be, well, no, let's say we know they're finishing the contract, we're hearing something we don't like, whatever, but they haven't approved it yet and no one's voted on it yet. We could go hard, then when it came to us,
And
we
of
would
course,
be, right? That's what you're saying.
Yes.
Correct.
but of course, that would also,
We would
that would also approve not just, you know, the teacher contract, whatever.
Police, fire, it's everybody, yeah.
Once we're hard, we're hard.
Once we're hard, we're hard.
Yeah.
I
For
know.
all contract negotiations and spend.
So following up on that, if for any reason we thought one way or the other, city's very responsible and they're going to settle good contracts that are affordable and within budget. But the school board, you know, is going to do something that we don't think is affordable and not wise. Can we be a hard board for the school district and not the city?
No.
It's gotta be all the.
Yeah.
But just because we're hard doesn't mean we would automatically reject
True.
contracts that were negotiated in good faith. There would have to be a real fundamental reason for us to do that. I mean, I can't think of what that would be because we have worked so collaboratively with everybody behind the scenes to do all of this.
Yeah, and I'm only playing out all the
Yeah.
scenarios to
Mhm.
know what the options are.
Well-
As I said, preface that with, I'm encouraged by the way things are
Yeah.
moving. I think both the city and the school are making the right.
And I mean, and I know the council's been saying, well, shouldn't we go hard? But I think the question of going hard at this point is there are no savings to be had. One member. But, well, I think there are more. But since there are no contracts for us to freeze wages, there are some savings in step benefits. But other than that, there really isn't any savings from us going hard at this time. It's only when contracts are in force and we can't afford them. But that gets back to the original issue, which is how are we allowing somebody to negotiate a contract that's unaffordable at this point, whether we're hard or not? And that's so, so I think we just want to be careful in all of this discussion. Okay, if there's no more, we'll now consider a draft resolution on our 2027 2030 financial plan that are given today and that we've reviewed. The resolution is under tab 4 in your book. At this time, the BFSA is unable to make a final determination as to the sufficiency of the financial plan. That is consistent with the adopted budget that will be submitted, and a financial plan is to be submitted by the district. It is further noted that the request for a budget gap plan has been satisfied and that the adopted budget eliminated the 5.5 million of restricted revenues identified during our review period that was conducted this past May. There's no change to our request for a financial gap closing plan or the due date from what was passed last month. May I have a motion to approve the resolution on our draft resolution?
I'll make that
Okay, a second?
I'll second.
Okay. Is there any further discussion, or if we discussed this enough at this point? Seeing none, all those in favor of the resolution say aye. Opposed? It passes. We will now review, we've reviewed third quarter. Great. Oh, for borough. How much time do we have? Do we have enough time?
35 minutes. I was
Okay,
gonna say, do you want to flip Bureau BMHA since we?
yeah, you want to do EMHA since they're here?
Yes.
Okay,
Fred and Jeanette, excuse me, I
no,
yelled at it before.
okay.
Oh.
Enjoy.
Good luck.
How many other?
Thank you, everyone.
Yes,
Thank you.
you.
Take care of
Okay.
yourself.
Thank you.
Slice, Jimmy.
Yes, if there's no objection, we'll move on to the Buffalo Municipal Housing Authority and the BFA report. Nathan, can you give that to us?
Certainly, thank you. Good afternoon, everybody, again. Following is BFSA staff's analysis of BMHA's quarter 3, 2026 financial results. This first slide shows all 4 budgets consolidated. On a consolidated basis, the BMHA is operating within its budget despite a temporary year-to-date $500,000 net loss. This is largely due to receiving of receipts and disbursements. The slide is a little misleading. It's only based on timing. On a consolidated basis, total revenues were $1.4 million greater than the budgeted date, driven by Section 8 voucher grants, transfers from capital grants, and the HUD subsidy. All other revenues were unfavorable by $1.4 million, largely due to, again, timing of management and administrative fee receipts. Net dwelling and non-dwelling income will be unfavorable at current fiscal year end based on the actual receipts at both AMPS and at Marine. Total expenses were $2.8 million greater than the budgeted date, primarily driven by maintenance, utility, and other expenses. All three of those. Maintenance expenses were unfavorable, will be unfavorable at current fiscal year end due to higher than anticipated repairs and landscaping / maintenance costs. Utility expenses will be unfavorable at current fiscal year end due to higher than anticipated electricity expenses. And then all other expenses include Section 8 vouchers. It's directly related to the Public Housing Authority grant voucher money that comes in. So that will be higher than budget, which is, we say unfavorable, but it's favorable in the sense that they have more money to give to low-income families for voucher grants.
So when we talk about the unanticipated repairs, higher than expected repair and maintenance cost.
Did I address that?
Sure, do you have a specific question?
So I know there's been a lot of conversation in the business about units being repaired and that type of stuff. So is this higher than anticipated repair costs due to addressing some of those things or something else?
Last year, we had a significant number of boiler issues. So there were a number of boiler repairs. There was a rental boiler for part of a year. So I believe most of that from last winter was boiler specific. Those are large repairs. The repairs you're talking about a toilet or a wall, those are $100, $50 repairs. Boilers are talking $20, $40, $50,000. That's where you get to these larger numbers that really show a difference.
And I reported residents talked about not having heat, so that would be a.
So obviously, like all of us, boilers do go out and have to be replaced, but many consistently when we go to units that say they don't have heat, it's that they're not getting the temperature they want. We walk into a unit, we have heat guns that measure the air temperature. It's 68, 72, and we're being told the resident doesn't have heat. It's because seniors wanted it 78.
I wanted it 80. I wanted it
82.
80 degrees.
And, you know, in developments where we pay the electric bill, we have to limit the upper heat because otherwise that unfavorable electric cost would be even higher and gas would be even higher. So often the no heat calls are, you know, they have a window open, they have an air conditioner in a window in January. It's not 80 degrees, but at times boilers do break and we repair them.
You know, looking at the employee unit data here, is some of the reasons why there may be delays or interruptions of addressing people's complaints about whatever, it's because there's over a 31% vacancy rate in your blue collar union.
Our blue collar union, we are consistently trying to recruit for, but our salaries, you know, are not as competitive as the private sector. Our work is challenging. They're in tenant units all the time. You know, it becomes a bit tiring. Some of our blue collar supervisors in particular have, chosen to go to the city where they work for inspections of vacant buildings, and they don't have to, do that work on a day-to-day. So yeah, we're constantly recruiting for labor twos, general mechanics, assistant
I mean,
supervisors.
actually, these are the on the ground guys that actually have to go into these departments or whatever and try to fix the problems. And when you got that kind of a vacancy rate, I can see how difficult it would be. And obviously, the public doesn't know about all this. And, the publicity that the housing authority gets, that they're not responsive in, again. So you guys are walking a fine line, right? We're trying our best.
Yeah, we're currently hiring or in process of hiring 5 new laborers. I'm not positive, I can't remember if they're labor twos, which do inside and outside work, or general mechanics, which only do inside work, but we also have 2 or 3 general mechanics we're recruiting and hiring for. It's a constant battle to hire.
Yeah.
Obviously, our salaries, in particular in some of the trades, aren't competitive with the private sector. Our residency requirement sometimes becomes a challenge.
Are you working with like the community college and others that are looking to place interns in the premises
That's a good
with
point.
you? Is there a program? Do you need help with us to try to help you connect with them?
So we are working on that in particular with our finance department and that, but our general laborers are blue collar, no experience required, and our general mechanics, we usually promote from within. So these are, guys who know how to use a wrench and a screwdriver and want to come to work and get good health insurance and retirement benefits.
I'm just wondering if there might be a pipeline there, particularly with the community colleges, to be able to maybe help you take care of some of this. And if there needs to be some change in rules and regs that you could bring it to us so that we could talk about it.
Absolutely, we can.
Now, are there requirements that they have to have New York State licenses or?
Driver's license only.
Okay, but not a electrician's license?
We have three skilled trades: locksmith, electrician, plumber, laser. We did just recruit a locksmith. We got a 6-month waiver for him to move in from the suburbs. He seems to be excellent. We're very excited. We did just recruit an electrician, a younger gentleman, really excited to have him on board. We do not have a plumber, and we have not been able to recruit a laser.
Right.
Thank you. Just to add to that, I know we discussed this at the previous board meeting, but it's partly for you to increase the rate of unit turnover, to get more people into there faster. And they had the BFSA had an RFP, to companies to come in to do that work, and then have the blue collars do the day-to-day work too. This next slide just shows the total staffing at Q3 compared to the adopted budget, and then it shows the vacancy rate for each employee group. Vacancy rate was 18.1% for the 3 vacant positions. Yes, there was about 31% vacancy rate within blue collar. So I'll take a look at each budget individually here. The largest is the asset management program, and revenues were $1.2 million greater than the budget to date. That included HUD subsidy and the transfers from capital grants. Those are both federal sources. Unfavorable variances were for miscellaneous all other revenues and $300,000 in rental receipts. Expenses were $1.9 million greater than budget. The aforementioned maintenance was 1.7, utilities were 1.3, so it's a combined $3 million for those two. And then some favorable variances within the other 3 categories: protective services, general expenses, and other expenses. AMP occupancy rates has been a question at previous meetings, so I wanted to put this on the slide. The occupancy rate has gradually and consistently declined since the pandemic era eviction moratoria expired, from about 83.6% on March 31st, 2022, down to 73.2% on May 31st. I have the June numbers, they're very similar to the May numbers. I say moratoria because there were actually 2 different evictions.
But may I speak to this number, because 73% sounds very bad. There are a number of properties that are excluded from our HUD official count. because they are under renovation. So the Perry home, the Perry row houses, any property that is currently renovation. So our HUD official vacancy rate is about 87–88%, which is still not where HUD would want us to be, but is substantially higher than would this be considered. So a unit that had a fire and is undergoing that mitigation is considered a HUD approved vacancy. What that does is it still allows the authority to get the HUD subsidy for that unit, even though we can't get tenant rent for it. So we try to diligently make sure that any unit that is in one of these statuses that would allow us to get a HUD approved vacancy gets that. So we have 2 years in that status. So that's when HUD's like, oh, you can't rent this, don't worry about it. So we have about a 13% difference from there. There's also, HUD doesn't count Marine Drive. Marine Drive is also going under that transformation. So we have not been actively leasing much of Marine Drive's front 4 buildings, anticipating a soon to come demolition, because we don't want to have to displace residents out of the property and make sure that every current resident has a place to go. So some of our numbers are strategically held vacant, some are under modernization, and some are just, there was a fire and we're still working to repair.
You say demo, are you talking about like rehabbing our buildings are coming down?
So the Marine Drive is a 3-phase redevelopment process. We've called it build, move, demolish, build, move, demolish. So our first phase is currently under construction. If you drive by, there's a big hole in the ground. It's about to start going vertical. The former parking lot for Marine Drive will house 269, not positive of the number, somewhere in that range, new affordable housing projects, a 2-story car parking garage. There'll be about 1-bedroom and 4-bedroom units. Those are tagged for people who live in the first 4 most front buildings of existing Marine Drive. When that construction is completed, tenants will move out of those 4 buildings into the newly constructed buildings. The 4 buildings will be demolished. New construction will happen there. The back 3 buildings will move into the new front buildings. And then the final phase will be new construction at the now rear of Marine Drive for new residents to the neighborhood.
Awesome. Next, we'll take a look at the COCC. Revenues were unfavorable by $1.2 million compared to the budgeted date. It was with management and administrative fees earned. Expenses were unfavorable by $200,000 compared to budgeted date because of maintenance, administration, and general expenses. Marine Drive. I just mentioned Marine Drive. Revenues are unfavorable by $200,000 as compared to the budget date because of 2 things. Rental income by $100,000, which will be for fiscal year actual unfavorable variance, and a net of miscellaneous other ones for about the same amount. Round them all together. Expenses were favorable by $100,000 compared to the budget date because of maintenance, utilities, and general expenses, which are those were unfavorable. Employee benefits. And the occupancy rates for Marine Drive, same thing, and it's gone down since the eviction moratorium was lifted. It's as high as 89.4%, and the last number was 70%. What?
Any other questions? Thank you for coming. Appreciate everything that you've done. If there aren't any other questions, is it okay that we take Bura and file that as we go forward and move on? I don't think there's anything in that report that we haven't talked about before. And if that's okay, then is there any other questions or issues?
On the Bureau, any luck in filling vacancies? Yeah.
Bureau?
Yeah. Not sure on why. Be aware of your vacancies. Well, a ton of vacancies.
I have a few, especially in the accounting.
I mean, you've had 10 vacancies since the last meeting, and this meeting still, it's a less 25% or over points.
Probably a year now.
Yeah.
They've had some vacancies.
I can certainly ask Stephen Mayor Baines if he has a plan for getting them moving.
Is there any new business that anyone wants to bring forward to the board? If not, are there any members of the public or online who may want to today, and I'm nodding, saying no. So seeing none of that, this concludes the meeting of the Buffalo Fiscal Stability Authority. Is there a motion to adjourn? Second? Thank you. All those in favor say aye.
Aye.
We are adjourned. Thank you, everybody. This was a great meeting.
Yeah.